Hey, good morning, Beartown Sheriff. So, just a heads up to you, Beartown Sheriff. Can you just let everybody know that I'll be in and out throughout the day? Hold on here. So the stream will be up. You'll see me stop in as the morning and afternoon happens. You should see a bounce here. What you guys want to be looking for? What you guys follow my cursor over here? What you guys want to be looking for, or bullish or bearish? I really don't care. What I care about here is type. Do they just back check this 5-minute trigger or this hourly trigger? So you blast up here and then just keep staircasing down. If you're a bull here, the one thing that I would tell you would be that any squeezing that happens here, right? Any squeezing, I don't care how high it goes, it has to come back and back check that hourly trigger and then beat whatever that squeeze is to get bullish again, okay? So that would mean that if we squeeze at any point, the hourly trigger, right, whatever that high is, you want to see a bounce and then a higher high from that bounce high, right, to get bullish again to go up. Okay, so that can happen, but you want to see this happen first. Does that make sense? So don't be getting all bearish or bullish out, or don't be getting all bullish out there unless you see that. Okay, so any squeezing should be short lived to send down, is my point. So if let's say we squeeze this up, right? It's only for liquidity. Maybe touch that previous high on Friday to send it right back down again. Does that make sense? So yeah, you can get the squeeze here, but is it sustainable? And for it to be sustainable, whatever that squeeze is, you need to beat that prior high, right? On Monday. So just make sure that that happens if you're going to put your bull cap on for a huge run to 480 before the end of quarter. The last little note that I'll leave you with here this morning is that historically the JPM collar is a magnet, and it should act as a magnet into the 31st. So we don't have a lot of time, right? You either need to put the 480 on the board like this week, next week, and then pull back screaming down into the end of the year. Or what it will end up happening is you'll see weakness. These next 2-3 weeks will get underneath the collar, and then they'll ramp up into the 31st, into the collar, and blast up to 4,800 into like third week of January, possibly even into March. So be conscious as we head into the end of this quarter. Be conscious on that JPM collar, because it doesn't matter if we're at 4,800. Doesn't matter if we're at 4,400. It'll magnet us into the end of Q quarter. So keep that in mind. We don't have a ton of time left. It's December 4th. We got like 3 or 4 weeks left. So we either get an ultra uber ramp into 4,800, or we just kind of bounce around and then die into the end of quarter. Then you end up seeing your ramp up into 4,800 into like January, February, March. All right, I'll be back with you guys in a little bit. I got one other note for you guys. When I pulled down the tool this past weekend to work on it, and when I pulled it down, I had to change some colors and stuff. I ended up deleting all of the beta testers, like literally all their emails by accident. So we're gonna have to work on that at some point today as well. Someone asked if I shorted so I wound up taking a putback spread for, like, the action should be, I mean, it's not guaranteed that it's going to be this, but the action should be 1 to 2 weeks of a grind sideways and down, right? Like, just think of it like staircasing sideways and down. There should be a moment, like a day or two of a bloodbath in the market. And that should take IWM with the entire market to the downside. IWM should outperform this week. And then get on board with SPX and Qs, and you should see a roll down in the next couple weeks for a low to buy for another holiday rally of some kind. Now, if at any point the market gets above the hourly trigger, back tests it, and wants to run for 480, we'll chase that all the way up. But right now, we're not there. So if you're a bull, until you see that price action, you just sit on your hands and wait, either for the low in SPY and Qs, or that price action to take place to continue on to the upside to 4,800. Yeah, I took that spread on Friday, man. I'm not expecting like huge downside. Like, I'm not expecting like a huge market roll here. Like, I don't know, like the run is over or anything like that. We'd need a lot more to happen for that to happen. So this is more protection to the downside, and then looking for a dips to buy. If you're a bull, uh, you should be on IWM. I've got IWM on this bottom chart over here on a 15-minute basis. But you should be, I'm going to tell you that there's a high probability of underperformance by SPY and Qs and money rolling into IWM over the next, or at least for the rest of this week. And then a dump in IWM that'll coincide with a SPY and Qs dump. Some kind of a flush just to get the correct pricing. But don't forget, I got to tell you guys, like, I've shown you guys that chart for for the JPM collar. I mean, we're talking, I think I showed you guys the last 9 or 10 collars, and we always magnet to that, whatever that collar we're closest to, into end of quarter. So just be conscious of that and its implications. Like, if we rip up to 4,800 into, like, let's say the 14th or 15th of December, I would literally expect us to bloodbath down into that 4,500 by the 31st. If we end up trading sideways and then down, and then like ramp up into that 45.15 on SPX, and then continue up to the upside to 4,800 in January, that wouldn't shock me either. Also, I'm going to leave the chat open today for people because I'm not going to be here most of the day. Yeah, you guys are gonna get you guys can have the tool today. I think today. I think you guys are gonna get the tool in your hands today. So um yeah, just look for underperformance and small just look for small cap or excuse me, look for outperformance in small caps and then bouncing around SPX and Qs with an eventual roll for a low on in participation by and from all three in that bloodbath. One other note would be to just take a peek at a post I made of a comparison between SPY and IWM. You can see how healthy IWM looks versus SPY and Qs.
The Fed is in a blackout this week, so we're going to rely on the data. ISM services tomorrow, ADP, productivity Wednesday, claims Thursday, and of course, the jobs number on Friday. Right now, 10-year holding in just above 4.25. Don't go away.
Good morning to all of you that are out there. I am here in the office. I'll just be popping in and out of the stream as the day progresses.
Bank of England says APF gilt sale operation cover ratio of 1.95. So the Bank of England sells £669.9 million of bonds in auction and receives £1.31 billion in bids.
I'm a member.
Some S&P laggards, Alaska Air's at the top in the wake of that announced deal with Hawaiian Air, although we should mention the Dow Jones Transports up almost 0.2%. That's the highest level since almost Labor Day.
Wow, rails.
Yeah, as some of the other constituents outperformed. Meta, AMD, NVIDIA followed Alaska Air on a tough morning for tech. We'll get Stop Trading with Jim in a minute.
At 10 a.m. Eastern Time, we get US factory orders month on month, forecast -3% on the prior 2.8%, with a range of -2% to -3.9%. US durable goods revised, forecast -5.4% on the prior -5.4%, and US core durable goods revised, prior 0%.
Let's get to Jim and Stop Trading.
Now, what's going on is that there's this broadening to lesser quality. And one of the higher qualities has been United Rentals. It's been just a horse. KeyBank downgrades it, basically just saying, you know, look, it's just moved up a lot. A lot of the good news is in it. And now, against that, you'll have something like a Lowe's, which is moving up, where the good news isn't in it yet. So there's people moving from, I know the great news, to, oh, wow, here's some good news. So be careful, because when this happens, you know, you're selling the good to buy the not so good. That's okay, not a great thing to do. Let this flop and chop until it's over.
You think it's a phenomenon that surpasses just specialty retail and all of those names you mentioned earlier?
Look, Walmart is the highest quality, and it's the worst
Within
stock.
5 minutes
You know,
time
how long
now
does that
at
go
the top
on?
of the hour,
Do you really
the
want to
US
just
factory
continue to buy
orders
companies that
month
aren't
for the
that
month
good
of October.
and sell Walmart?
Forecast
No,
-3%
there's a level to buy
on the prior
Walmart. It's just not here yet.
2.8%,
Pretty close,
with
though.
a range of -2%
How about
to
tonight?
-3.9%
All right, Marvel's not doing well. How about
expected.
Marvell? Marvell had a
Durable
bad
goods
quarter,
revised,
but their
forecast
AI part was very, very good. Matt
5.4%,
Murphy's going to tell a good story
unchanged from
about
the prior,
AI, but everything
-5.4%.
else, wow,
Core durable
not
goods
good.
revised, saw a prior flat
Yeah, we'll
read
see
of
how long it
0%.
lasts, right? I mean,
Jeez, I know. I mean, look, it's a hard moment because people want to they want to sell Microsoft because it's down 10. Please don't do that. That's high quality. Don't sell Microsoft.
right. I know you mentioned the transports during our cluster there, but you mentioned the rails specifically.
Well, CSX is telling me, they were telling me a few weeks ago business isn't that good. But you know what? That's what people want. Union Pacific, the business isn't that good. They want that. They don't want the ones that are doing well. They want the ones that aren't doing well, betting that if the Fed isn't going to raise, it will do well. There's a lot of hope there, Carl. hope should not be part of the equation. Stick with quality. I like quality.
Not a strategy. Jim, we'll see you tonight. Good hour. Got to a lot. Mad Money, 6 p.m. Eastern Time. Dow down about 67. When we come back, as we said, the CEOs of Alaska Air and Hawaiian Airlines on their merger deal. Don't go anywhere.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
One minute remaining. I'll lead with US factory orders month over month.
Good Monday morning. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla with Leslie Picker, Michael Santoli, live at Post 9 of the New York Stock Exchange. David and Sarah have the morning off. Stocks coming off 5 straight weekly wins, longest stretch for the Dow in just about 2 years, and the S&P tantalizingly close to a 20% year-to-date gain. Fed's in a blackout, so we'll get some data this week. Jobs number on Friday. Got some conferences going on, as well as some investor updates from companies like Shopify, McDonald's, and J&J.
Yeah, and while the markets are in wait-and-see mode, companies are not holding back on their headlines. We're about 30 minutes into the trading session here. 3 big movers we're watching today. Shares of Spotify, the music streaming service, planning to lay off 17% of its global workforce, around 1,500 workers, in order to cut costs. It's the company's third round of layoffs this year, sending shares up about 10.4% currently on that news. Alaska Air agreeing to buy rival Hawaiian Airlines in a deal worth $1.9 billion. It works out to be about $18 per share for Hawaiian plus debt. That's a huge, huge premium for Hawaiian, which closed at just under $5 a share on Friday. So you can see shares of Hawaiian up about 189% right now, and the CEOs of both companies set to join us later this hour. And watch Nokia today. Under pressure on speculation, AT&T could be dropping the company from its list of 5G equipment suppliers. Verizon already dropped Nokia as a 5G vendor back in 2020. Those shares down about 9% right now.
All right, factory orders data out just moments ago. Rick Santelli, has the numbers for us in Chicago. Hi, Rick.
Noting the prior
Hi,
revision
Mike.
on US
Indeed, factory orders for
revised down to
October
2.3%
expected to be
from
down
2.8%.
3% or down 3.6%. That's actually the most negative month-over-month change since April of 2020. And what's very interesting here is in the rearview mirror, originally last month was reported at 2.8, which was the best since January of 2021. That is now downgraded to up 2.3 to up 2.3, which becomes then only the best, still say since January, actually, when it was up 3.8. Transportation figured in a negative way, which has been rather unusual. So you strip out transportation, the number improves to minus 1.2%. Durable good orders, these are final numbers, Mike. These are replacing the mid-month read, so minus 5.4 remains at minus 5.4. And just to give you an idea, July of this year was minus 5.6. That was the weakest month-over-month change since April of 2020, so very close. And if we look at transportation, it remains unchanged. So in this instance, including transportation, made the number significantly more negative. Capital good orders, non-defense ex-air, a proxy for capital spending, down 0.3%. That is from zero. From zero becomes now down 0.3. That is obviously, that was from down 0.1%. Now minus down 0.3 becomes the worst level in that metric since July. And finally, if we look at shipments versus orders, they remained at zero unchanged. And that was the weakest level since it was minus 0.3 also in July of this year. Interest rates have moved a bit lower on these weaker than expected data points, and that really is going against the grain of what had been earlier much higher yields versus some of Friday's cycle intraday lows. Carl, back to you.
Talk soon. Rick Santelli. Meantime, the Dow and the S&P coming off 5 straight weekly wins, as we said. Yields on the 2-year note lowest since June. Mike's written some stuff over the weekend calling for a do-over on the soft landing trade.
That's the way it feels. Essentially, we basically traveled the same path in the S&P 500 in the last 5 weeks, from 4,100 to 4,600, as we did from May into July. That was the July peak before the correction that took hold late summer. And it's been accompanied by a broader embrace of the soft landing scenario, which basically just means focus on economic resilience and confidence that inflation's going in the right directions. Financial conditions easing, investor sentiment brightening from pretty pessimistic levels. So the obvious question is, where does that leave us? Are we sort of as vulnerable now at 4,600 or almost there as we were in late July? I'd say not quite. If you look at how overbought technically the market is, it's getting stretched without a doubt, but maybe not as extreme as we were in late July. Investor sentiment and positioning also not quite as overheated as it had seemed back then, but moving definitely in that direction. You're seeing some of the frothy stuff, some of the speculation start up, and some of the comfort with this idea that we've hit a soft landing, which basically means it raises the market sensitivity level to any data points that stray from that Goldilocks path. So that's, I think, the spot we're in right now. Seasonals are better. Valuations are lower because earnings estimates are higher. So all of this fits together into a relatively comfortable spot, but where the stakes are rising for the numbers to bear out what investors now expect out of the economy.
So history doesn't always repeat itself, but it may rhyme. And I like how you point out the fact that while this isn't an acutely fragile market, a lot of it has to do with the fact that, corporate estimates are going higher. And so it looks like the same level, but it's actually a little bit cheaper than maybe it was at 4,600 than it was in July.
A little bit less expensive because estimates are moving in the right direction. Also, it's worth noting 2 years ago today, in the first week of December 2021, we were at almost 4,600, 4,500 and change. And you were even more expensive then because our estimates were low. We don't know if the estimates are going to come through. A lot is relying on 2024 because for the current quarter, actually, there's been some softness in the forecast at this point. So all that together, credit markets seem like they're okay. It's much more a matter of resetting expectations once you've had this run. What is fascinating is we're getting rotation rather than a broad retrenchment in the market. So today, again, small cap index is up. The Magnificent Seven are kind of the source of funds for profit taking and reallocation elsewhere. We'll see if that choreography can stay intact. If so, then that definitely kind of gives life to this rally because it means it can kind of cool off the indexes and kind of go to some laggard parts of the market without getting us further stretched and set up on a perch.
It's certainly being reflected in some of the sell side calls today where, and even to Jim's point this morning about people selling quality in favor of names that either have surprised already or may surprise given some of the valuations and work that they've done internally.
The quality factor has been the strongest single investment characteristic to really rely on this year. So every time the market sort of looks elsewhere to see what hasn't participated or maybe gets more comfortable with the macro outlook or the liquidity outlook, if you're thinking about rate cuts next year, it does net benefit those other areas. The thing is, there's been such a gap between the laggards and the leaders that you can just have this be very mechanical mean reversion and not necessarily be a transition in longer-term leadership in the market.
Let's stick with the broader market this morning. Our next guest says that economic pain is likely in 24, but doesn't mean that stocks will struggle all year long. Charles Schwab Chief Investment Strategist Lizanne Saunders joins us this morning with a playbook for next year. Lizanne, good morning. Great to see you.
Morning, Carl. Nice to see you, too.
It sounds like one of the lessons you're trying to put forth is that sentiment swings both ways, and you kind of got to watch out for that chop.
Yeah, and you know, investor sentiment has been such an odd duck over the past year or so, really mixed messages. One example is just recently, in conjunction with the rally, you saw attitudinal measures of sentiment like AAII bulls really spike higher, bearishness moved lower. But AAI also does a monthly allocation survey on what the actual exposure is, and that has come down. So it's sort of this dichotomy between what investors are saying, and they're often short-term reacting to whatever the market is doing, and what they're actually doing. But also in contrast to individuals lowering exposure, the average active manager has actually been increasing exposure. So you're also seeing that divergence there. So there are times where sentiment's really clear. This is not one of them.
Yeah, it kind of reminds me of what like UMISH is saying versus what retail sales are saying. I mean, active managers are consumers too.
Yeah, and I think, you know, for active managers to be a little bit more enthusiastic is not terribly surprising and very much in keeping with what Mike was chatting about before. You are seeing this rotation. You're seeing a broadening out without a sort of collective downturn in the market. The return of the risk-free rate more broadly means ostensibly a reconnection of fundamentals to prices. And I think that's providing a more level playing field for active managers relative to passive indexes. That was an on and off theme throughout 2023. I think it's going to be a big in 2024, where active managers actually see a sort of a growing roster of opportunities, particularly outside of the Magnificent Seven.
Is that still true, Lizanne, if the Fed does embark on an easing campaign? Because one of the key reasons behind this dispersion that we're seeing is because higher interest rates have kind of created this renewed attention to fundamentals, as you mentioned. So if that reverses, does active management still kind of play that same role in 2024?
Well, I think there's a lot of question marks short term. If you lay out everything that the market's been doing, the market has priced in probabilities for Fed policy in 2024. It's hard to square the circle because an environment in which the Fed actually does start cutting rates as early as maybe March of next year, I don't think the backdrop to that looks like it does now. With inflation having come down, but still well above the Fed's target, not a lot of weakness in the labor market or the economy, how that provides a green light for the Fed to cut. So I actually think more economic weakness near term is probably a better scenario for the equity market than weakness that gets pushed much further into the end of the year and comes because the Fed has to stay at least in pause mode. So again, I'm not sure all of the various sort of implications and stories and narratives and what's being priced in all fit in some easy story. I think something's probably got to give a little bit.
Yeah, and Lizanne, given that context where you might have to absorb some economic weakness before you get the benefits on the easing side from the Fed, what does it suggest to you in terms of the characteristics of stocks that'll work? I mean, you've been kind of on that quality train that has outperformed this year. It would seem to be people are kind of itchy for maybe a change in narrative here or leadership change. It's just unclear it's going to come.
No, I think you still want to stay up in quality. Many of those factors that worked last year, I think you still want to focus on things like strength of balance sheet and return on equity and interest coverage. But especially in this environment, I think you've got to apply a little bit of a valuation filter too, so that you avoid where stocks are extremely overvalued or overbought. So it's sort of that added kicker. There are times where you want to go way down the quality spectrum. Those times are good for traders. They don't tend to last very long. I'm not sure that's the kind of game you want to play right now, but adding in that valuation filter on top of quality is probably the nuance that's appropriate as we head into next year.
That's apropos, especially given some of the price action today. Lizanne, thank you. We'll talk soon. Lizanne Saunders.
Good to see you guys. Thanks.
As we go to break, let's take a look at the roadmap for the rest of the hour. Alternative assets are soaring in this market. Bitcoin, fresh highs, gold prices, new record. How to play that space from here.
Plus, a look at one stock adding to big gains on the year as it gets membership to an exclusive club. We'll tell you what it is and why more than 90% of the street calls it a buy right here.
And a merger taking off this morning. Alaska and Hawaiian Airlines agreeing to a deal. Both CEOs join us to discuss the road, or shall we say the skies ahead, after this break. Stay with us. A big show still ahead.
Vaj.com.
Welcome back to Squawk on the Street. Relief in rates that we were just talking about earlier in the hour may come as welcome news for bank investors, as Piper Sandler points out in a note over the weekend. During the past 8 declining rate cycles, bank stocks rose in all but one of those periods. Not surprisingly, the exception there is 2007, 2008. However, these cycles also tend to coincide with rising net charge-offs as the Fed cut rates to bolster a slowing economy. Piper polled the names of the banks that saw their net interest margins compress the most during the recent rate hiking cycle, which the firm says will help identify those that will benefit when rates do decline. From there, the firm screened for their favorites, which include Connect One Bancorp, Dime Community Bank Shares, Evans Bancorp, Hanover Bancorp, and Investor Holding. Morgan Stanley, similar note this morning about how stable rates lower the risk for the sector. As such, the firm is moving both large cap and mid cap banks from a negative bias to a positive bias because the stocks are cheap, in their words, and NIM pressures are abating. It's also a big week ahead for the banking industry. Tomorrow we'll be covering the Goldman Sachs Financials Conference with interviews including one with Bank of America's CEO Brian Moynihan and Perella Weinberg CEO Andrew Bednar. And then Wednesday, the 8 largest bank CEOs will appear in front of the Senate Committee on Banking, Housing, and Urban Affairs for their annual check-in. So lots of bank news this week against this backdrop where we're constantly talking about, the prospect of 2024, lower interest rates, what it means for various sectors. Banks obviously in the spotlight.
Been huge beneficiaries of the recent relief in yields, obviously. And the credit story is the one that I would be most eager to hear about because the CEOs have been pretty, undisturbed about the fact that it's a normalization. Yeah, we're seeing charge-offs tick up. Delinquencies are just going back to pre-pandemic levels, but are they going to stop there?
And reserves haven't been, at least in recent quarters, haven't been that monstrous in a way I think a lot of analysts in the street were expecting, given all the uncertainty that's out there, and perhaps some of that has to do with the prospect of lower interest rates next year.
What's amazing is the degree to which corporates and households locked in the low rates. Mark Sandy had an amazing chart over the weekend. The percent of non-financial corporate cash flow going to interest payments is near the lowest since the end of World War II.
Yeah. Despite what we're seeing, and even if the Fed does, make some sort of pivot in a certain way, I mean, setting up against this backdrop, you have to wonder kind of what that all does, given the fact that financial conditions, they are tightening. There's no doubt about that. But I think a lot of people expected them by this point in the rate cycle to be a little bit tighter than they are. So I wonder kind of what consideration the Fed has as it looks to potentially, reverse its current cycle that it's in.
Meantime, big news in the airline industry today. Alaska Airlines slumping after announcing plans to acquire rival Hawaiian in a deal valued just shy of $2 billion, including debt. Our Phil LeBeau joins us this morning with the CEOs in a first on CNBC interview. Hey, Phil.
Hey, Carl. Let's say aloha to Ben Minicucci, CEO of Alaska Airlines, and Peter Ingram, the CEO of Hawaiian Airlines, joining us from Honolulu this morning. Guys, how long were you talking about a possible merger? How quickly did this deal come together? Ben, we'll start with you.
The crypto fear and greed index is at 74 out
thanks,
of 100.
Phil, and good morning. We were talking about this early in 2023. The idea started, we started working on it. And we went through several months of diligence with our board and advisors, and I approached Peter a few months ago with the offer. That's how it kind of unfolded.
And Peter?
Yeah, as Ben said, he came to me a few months ago. We took the initial proposal.
Seeing some commentary from S&P on the real estate sector, they expect the US and European housing markets to face pressure,
did what I should do, which is take it to my board.
Affordability.
We analyzed it, worked through it, and we've spent some time over the last few months
S&P on the real estate sector expect the rental
Ben
housing
and
demand
his
next
team, and
year
it
to remain
culminated in
healthy, albeit at a
yesterday's
slower pace.
announcement and signing the day before that.
Ben, you know what everybody's saying who's looking at this deal today. The Biden administration has made it clear it's not crazy about airline mergers. We know what's going on between JetBlue and Spirit right now. That's playing out in court. How do you convince the Biden administration, the DOJ, that this deal, that Alaska and Hawaiian makes sense?
For our real-time service.
Phil, I think, on the merits of this deal is simply it is pro-consumer and pro-competitive. When you combine both these networks, we'll have about 1,400 flights a day. Only 12 out of those 1,400 flights is where we have overlap. And then you have an expanded domestic platform, an expanded international platform for our customers on the West Coast and for our residents in Hawaii. So if you think of someone living in Honolulu, they will have 3 times the options and the destinations to fly out of Honolulu than they do today. So this is definitely pro-consumer. And then when you think about that expanded domestic footprint, that expanded international footprint, we will become a bigger, stronger carrier to compete against the big 4 that control 80% of the domestic market share. So we feel that we check both those boxes, and we're hopeful that it'll be seen in a positive light.
Yeah, but Peter, you understand what the regulators are looking at these days. Did you talk to the board, or did you and the board talk about, hey, is there a possibility we put this off for a couple of months? We have an election coming up. It might be a better chance of this getting through after November of 2024.
Well, we certainly talked about the regulatory process with our board. That was part of our valuation, and you know, we came to the same conclusion that Ben just articulated, that this transaction needs to be looked on its own merits, not compared to any other. That it is pro-consumer, that we're giving more options to travelers to Hawaii. There's really not a lot of overlap, and the route networks are very complementary here. We're relatively small players in the industry. So I think when you take a look at it in the correct context, you'll see that this is a deal the regulators should look at favorably.
Hey, Ben, what is the plan for using Honolulu, if this deal is approved, along with your hub in Seattle, to further expand what Alaska is doing in terms of international flights, especially Asia-Pacific routes?
Well, Phil, we're really excited. You know, Honolulu becomes our second largest base behind Seattle, and you know, Hawaiian Airlines, you know, I deeply respect and admire what they've done, you know, throughout the last decade. They've built a phenomenally strong base out of Honolulu. Their international is very, very strong. And so that existing network will continue. But as you know, they acquire 787s, as you know, the 787 fleet comes into play, that'll give us a lot of options on where to put the 787s. Either continue to grow Honolulu or position them in our hubs of strength on the West Coast. So very exciting for us as we get into the international domain.
Ben Minicucci, the CEO of Alaska Airlines, Peter Ingram, CEO of Hawaiian. Guys, we're going to have to leave it there for now. Ben, it's good to see you already have the code of wearing the Hawaiian shirt since you're in Hawaii. And that's how we're going to see corporate meetings.
It looks really good. Yeah, thanks, Phil.
Yeah, if this deal goes through. Next, you're going to be saying Mele Kalikimaka to me whenever we're talking around the holidays. Hey, guys.
That's impressive.
Thank you very much. Leslie, I will send it back to you.
Good stuff, Phil. Yeah, consolidation of dress code there at the very least. Still to come, the Bitcoin rally marches on, hitting its highest levels of the year. What's fueling it? Bitcoin, not the only alternative asset seeing big gains today. Gold hitting new all-time highs. How much higher, though, could it go from here? Stay with us. We're back in just 2 minutes.
So it's noting seeing some strength in WTI crude here. No news hitting the wires at the moment, just keeping our eyes out nonetheless. So that's WTI trading around $74. It's just pairing those losses now.
CNBC.
Bitcoin holding above 41,000 this morning, the first time since May of 2022, as investor appetites for an official Bitcoin ETF continues to grow. Crypto reporter Mackenzie Sigalos here to break down the action. Mackenzie, there's never a shortage of maybe reasons or excuses why Bitcoin does what it does: risk appetites, interest rates, the regulation, possible ETF. What do you see driving it right now?
Hey, good morning, Mike. So, as you said, Bitcoin had been testing that $40,000 level the last few days, finally breached $42,000 earlier this morning, trading at more than 5% in the last 24 hours. Meantime, Ether, the second biggest cryptocurrency by market cap, is back above $2,200. So, a couple of things are happening here. For one, the market, as you mentioned, is expecting to finally see a rate cut in the coming year after recent comments from Fed Chair Powell last week. But really, the big thing on everyone's mind are the spot Bitcoin ETFs. Traders are increasingly bullish that the SEC will approve one of those applications by the first quarter of 2024, potentially as early as mid-January. This would allow investors to buy into digital currency directly through the same mechanism that they already use to buy stocks and bond ETFs. So you've got top asset managers, including BlackRock, WisdomTree, and Invesco, that have filed applications with the SEC. And part of why this is so significant, Bernstein points out in a note today that the spot Bitcoin ETFs are really the largest pipe ever built between traditional financial markets and crypto financial markets. They're expecting that 10% of Bitcoin in supply, or around $300 billion, will ultimately be managed by these ETFs by 2028. Meanwhile, crypto peg stocks also moving higher this morning. Digital asset exchange Coinbase up more than 6%, MicroStrategy more than 7%, and Bitcoin miner Marathon Digital up more than 9%. Also worth noting, Coinbase is that custody partner for a lot of these spot Bitcoin ETF applications. Their stock was up more than 60% in November, Mike. Back to you guys.
Yes, coming off a pretty significant downturn from the highs in 2021. It has had a very good run. I guess the question, Mackenzie, is, we have gold ETFs. We have had oil exchange-traded products. I guess there was some excitement around the ability for investors to own those in that form. I just wonder if once the reality is here that the ETFs are in place, if this is still going to be a catalyst.
Well, I think that's the question, right? So, at the moment, it's building to a lot of enthusiasm among crypto traders. You saw $1 billion pulled off of the crypto exchanges, which is typically bullish sentiment, showing that people are looking to hold on to their coin. But one has to wonder, once you start to see a slew of approvals, will people look to sell to lock in those gains from the price run-up that we've seen? So it's a great question and something that's on a lot of people's minds.
Quite a move, though. We're keeping a close eye on Mackenzie with your help. Thank you, Mackenzie Sigalos. Still ahead, a look at one mystery name about to get added to the S&P. Is the stock a buy here? We'll discuss. And a quick programming note as we go to break. This week, CNBC launches its new cross-platform franchise. It's called Cities of Success. The new series explores cities in America that have transformed into business power centers, driving change all across the entire U.S. economy. Cities of Success will feature a different city each quarter. And our first stop on Wednesday night is going to be Nashville. Don't miss CNBC's 1 hour primetime Cities of Success, Wednesday, December 6th, 10 p.m. Eastern Time. Back after this.
Es Iwm.
Welcome back to Squawk on the Street. I'm Bertha Coombs with your CNBC News update at this hour. The Israeli military says that its ground offensive into southern Gaza is underway. Troops are in areas where hundreds of people have sought shelter since the start of the war. The push into the south is raising new fears of civilian casualties, as Gazans say they have no safe place to go. The former police officer convicted in the murder of George Floyd has returned to prison custody after he was stabbed 22 times by a fellow inmate. Derek Chauvin is currently serving a nearly 23-year sentence. A criminal complaint says the inmate who allegedly stabbed him used an improvised knife. Corrections officers claimed the inmate told them he was trying to kill Chauvin. That inmate is now charged with attempted murder. The Supreme Court is hearing arguments today on the legality of Purdue Pharma's bankruptcy settlement. The OxyContin makers' deal would give billions of dollars to people harmed by the opioid epidemic. In exchange, it would shield Purdue's owners, the Sackler family, from future opioid-related lawsuits. And Leslie, this is one that people are watching very closely. It has a lot of implications for a number of industries.
Yeah, especially in bankruptcy proceedings in particular. Bertha, thank you very much. We're an hour into the trading day. Let's get to Bob Pisani with more on what's moving today. Hey, Bob.
We're at the lows of the day, and in a way, that's a good sign. As Mike's been pointing out, we are way, way overbought on a lot of sectors, and it's about time we got a little bit of a correction. To take a look, it's the sectors that have had the best moves here that are doing a little bit on the downside today. So tech is out there on the downside, communication services. You see what's going on with Meta and Alphabet down. Energy's had a rough quarter. And it's still having a fairly weak time. Bank's been an enormous leadership group since the 1st of November as interest rates move.
Oh, shit. Blood in the marketplace.
In the fourth quarter. I just want to show you big cap right now so you see the correction that's going on. We've had an enormous move in some of these big cap stocks in the last month or so. So Salesforce has been a big help, and Microsoft to the Dow. They're to the downside. Meta and Alphabet, and you can go through the whole list here of big cap tech names all to the downside. But overall, the overall market is generally overbought right now. So Goldilocks has been the story. Lower inflation, lower interest rates, generally higher earnings for 2024. Just take a look at some of these Dow names. Amex in the last month, it's up 25%. Essentially has been straight up, as you can see. Take a look at anything else. Even tech, IBM, which is a surprising outperformer, not normally concluded among big tech names that have a lot of momentum behind them, has been strong, up about 15%. Boeing's been huge. Industrial stocks have generally been big outperformers as well, up almost 30% in the last month. And finally, the banks have been fabulous. I mentioned PNC's been up 20%. You can go right down the list, Fifth Third, anything in the big super regional bank sector has been doing really well. I was making a little fun of the strategists last week. They have their estimates for 2024 out. They're generally wrong. The analysts are coming out with their
All right. What's going on out there? Let's see if we can hop on for a minute and maybe answer some questions here. Hold on here. Let's move this over. Oh, I gotta turn the camera on. Shit. I thought the camera was on. Hold on here. I gotta. Mute the color. Oh, it is. Nope, it is on. There we go. Turn that on. All right. Good morning, everybody. Weakness today, right? Not only weakness. Let me see if we can get in here and chat. Hold on, let me just. How are y'all doing out there? So, let's close, or not close, but just make that smaller for a minute. Okay, so weakness today, right? If you look down below in this live stream, you'll see the weakness, the type of weakness in S&P 500 versus the type of weakness in IWM. You see how IWM's holding up a little bit better.
10 basis points on the day.
A little bit better than than SPY, right? So it's not like SPY's doom and gloom. It's more like, or not doom and gloom, but you can see the rotation of money into IWM, and it's holding up a little bit better, right? So we know that it's not as bearish as SPUs. Now, SPUs could bounce around here. We're not talking like full-on doom, like, you know, it's going to go to zero, SPY's going to zero, anything like that. Again, I made a post that said we should bounce around as we staircase down over the next couple weeks on SPUs and NASDAQ. You should see relative strength out of IWM versus those two, and then you would see the three indexes come together and have that
US
bloodletting for a dip buy.
Down 1%.
I can't believe that's happening today. It's awesome. I had a great weekend, by the way. It was a very busy weekend. I went out with, thanks for asking. I went out with, to start the Christmas holidays with my children. Matter of fact, my youngest took off to, or my oldest, right? My pride and joy, doing the right thing. Been breaking her ass since I met her when she was 0 years old. Went and took an SAT this weekend and felt very confident. Hung out with some friends. She jumped on a train to hang out with some friends of hers, and they took the SAT test this weekend, and she said she felt really good about it. And then I spent the weekend with my wife and my youngest daughter. That's a whole nother discussion. We'll talk about the youngest daughter at some point. Maybe someone older and wiser than me can help me out with that stuff. But we'll talk about that later when we have some time. So thanks for asking. I appreciate it. Because kids are different, right? You get children that are they have like the nature versus nurture, and then how you interact with them. So maybe I get some help from an older person out there that's been through that before. Nothing negative, just two different kids and two different people. And then, of course, how you act around with your wife and how you interact with your wife and your kids and all that kind of stuff. But we started a bunch of holiday stuff, so we spent time ice skating and playing games, and went downtown, did this big cool thing, and then that led into this morning. So let me see what you guys are in. Yeah, she's taken a bunch of PSATs. This is her first SAT. She'll probably end up taking the SAT, the ACT, and some other one like 3 times. And if they're good, she'll use them for college admissions. If they're not, she probably won't. I think a lot of these kids today don't need them, but I think it should still be a part of the experience. She's done. I think the last time she took a PSAT as a sophomore, she got 1,200. So I'm hoping that she's around. She's a new junior, so I'm hoping that she can at least hit that 1,200. And then she takes it's still a legit test, but she takes what she should be taking towards the end of her junior year. So hopefully she can get like 1,200 or higher, something like that. Get around that 1,400 mark would be really, would really make me happy. And it's not easy getting those scores. Like a lot of people don't know how hard it is to get like 14s, 15s, stuff like that. It's not an easy thing to accomplish. Very difficult. For kids. So she's really breaking her ass. My oldest, man, I love her. My youngest, I love her more than the world, but it's hard being a dad. It's hard. It's difficult. It never said it'd be easy being a father to children, right? And for my youngest, it's gonna be a tough go. It's tough being a dad to my youngest daughter right now. It's a challenge. My youngest is the person that she's figuring it all out on her own. She's got it. She's like, Daddy, I got this. I'll figure it out. And don't help me. Don't be there. I don't want any help from Dad. I got it. And of course, she's got the hockey stick backwards, and she's doing it all backwards. And I'm not really afraid right now, but she's in that age group. Like she had all those years of discovery, but she's starting to get into that age group where she needs to, like when things get more complicated, she needs to start relying upon. Be inquisitive, have adults help her along the way so she can make those jumps into the difficulty that's life, right? Life is hard, and that learning, that educational experience in life. So we're trying to make that transition right now. It's been a challenge. It's been real tough, and I don't want her to turn into that person that what I noticed when I was in school was what I noticed in school was I had friends that were able to make that jump, right? Use the resources they had around them and make that jump as they continued to grow. And then after high school and college or trade school or whatever it is they're going to do, they succeed for the rest of their lives. But I have some friends that I grew up with that said fuck you to the world, and they did it when they were young, and they got left behind. Teachers don't care. Counselors don't care at school. Your friends don't care. They end up going away, and you get stuck where your only experience is terminal uniqueness, I think is what my father calls it. My dad calls it terminal uniqueness. And so we're working on that right now with our youngest. That's awesome, Sauce. Yeah, you got to let them make mistakes. I agree with that 100%, but you want to be able to like guide them through that process of making mistakes, right? And you know, my kid's got a dad, so you got a dad there. If you don't have a dad, that sucks, right? When you don't have a father figure or a mother figure, whatever it is, or even both parents there to guide you through life, you're just gonna wing it. You're like, oh, that's great when you're 5, 6, 7, 8 and stuff, but you're 10. It's time for you to know that life is gonna get tough, right? You're gonna have to work hard to live a great or be happy most of your adult life. You know, a lot of my friends peaked and they call it peaking, right? You peak in 8th grade or you peak in high school. And then you end up, the truth is a lot of people end up having a tough go of it in life. You can look at it, right? You can go to Reddit, go to anti-work, go to any of these subreddits where people are having a real tough go of it in their young adult lives. And you can see it, right? And I don't want her to have that tough life. I want her to always be able to enjoy, like, not peak in 8th grade, not peak in as a senior, and have a nice, long, fulfilling life. Yeah, you got to hang in there. You got to hang in there. Exactly. Bumbledine just said my youngest was the same way, challenging, hang in there. He's now finishing senior year in industrial engineering at A&M. You know, my sister, right, had so I'm the oldest in my family. My younger sister had learning disabilities growing up, and she had a real tough go of it. She had to work her ass off. Like, for everything I did, it took her double the work to do, and she became valedictorian in college. But it was not an easy road for her. I have to say, like, my sister had to work her ass off. And so, of course, as a parent, you have to be there. My dad and mom were there for my sister because of how difficult it was. It's a lot of fucking work when you're young. It's like, it got easier for her as an adult, but those years of having to learn, or like wanting to learn, having to learn, it was a challenge. And had my parents not been there for my sister, she probably would have fallen through the cracks. It really did take my mom and dad being there for her through those formative years. Yeah. And, you know, parents will let kids go through the cracks for one reason or another. Either through, like, I got to work 2-3 jobs to get by, or I can't deal with this, or people are not on the same page, whatever that might be. And so, you know, it's not, nothing's, yeah, just when you think it's going to be easy, it gets hard, right? You're like, I got perfect kids, I'm a perfect dad. And then you find out that it's not always about that. Sometimes it's just about being there for your kids in the way that they need you to be there for them. Bring up Bob. Hilarious, bro. Yeah, so let's take a look here, and let's take a look here at SPOOs. So SPOOs, remember, even if we're heading down or up, it really, you know, whether we're going up or down, always remember your tools. Always remember there's no straight line, right? There's no straight line up. There's no straight line down. You're going to come into some areas of known support. You can see them right here, right? There's known support here on Friday. There's known support here in pre-market, and this is where our gamma flip is. So we're not bearish yet. So far, this is just a pullback, right? We're not in a negative gamma regime. We haven't broken through negative gamma yet and rejected to proof that we're in negative gamma, right? you kind of, even if we break through here, you still need that confirmation, and you still need the hourly trigger to head down here and start ejecting off it for more continuation of the downside. So this could be consolidation right now. So it's not like, hey, I'm super bearish. It's more like be aware of, if you're a seller or a bear, just be aware of where you are in the process. If you're a bull buyer, make sure that you're aware of where you are in the process. And we're not in the doom and gloom process yet. And we're not bullish right now, right? We're looking, if you're a bull, you're looking for a nice dip to buy. And if you're a seller, you're staircasing this down. You're being a technical trader as a bull, as a bear, as a seller, and you're going to take it level by level. You know, so if it bounces and we start heading back up, you're a seller, you can be stone-faced, cold-hearted trader and say, hey, we didn't break down here. We're going to start heading higher, so close my fucking shorts and we're heading back up again. Just be very methodical here. If you're a seller, be very methodical. If you're a bull, you're just looking for, do we bounce and do we get back on track to the upside, okay? That's basically the two stances that I would be listening to right now from anyone out there. So if you're on social media, you're looking for someone that's like, I'm a fucking technical seller right now. I'm going to sell level to level until we start breaking through some shit. You listen to that guy or that gal on social media. And if you're a bull and you're looking towards a bull, that's what a bull should be saying to you, right? We're still not bearish yet. We're still consolidating, and we're looking for a dip to buy if there is one on the hour, or excuse me, a dip to buy down here on where that negative gamma regime is, or a return above the hourly trigger. Now we're going to talk about something here that's important. Okay, I mentioned it this morning, and we're going to have a little chat about something here. Okay, so this is the hourly trigger right here. Hold on a second here. This is the hourly trigger right here, and there's two things you're looking for as a bull. Like number one would be a flattening of the 1 and 5 minute, right? Whenever this flattens, we have a possibility of turning around to the upside. And the next thing for bulls would be for some serious confirmation that we're done consolidating and we're going to continue to the upside, would be price action squeeze above, right? And then a confirmation trade back on this hourly trigger for positive trend to continue to the upside. This is pretty key right here that this takes place and that you beat the previous high back here, okay? You want to like beat the previous high and then trade above it, and then what you'll end up seeing is you'll see that hourly trigger begin to head higher again with price above it, and you can with confidence be like, okay, corrective behavior is over and we're going to head back to the upside again. So just be aware of that as a bull and as a bear. Now we're coming into S2 right now. It's right down here. And this S2 also aligns with the pre-market low of Friday. Now I'm going to show you something else here. Hold on here. This is the Weeble chart, right? I'm going to get rid of IWM right now and just go to a one chart here. We're going to go to SPY really quick. I want you to just see back here. I want to come back here. And I just want you to see this is trend going up right here, right? I just want you to see that negative gamma has been moving up quite aggressively. And what we don't want to do is give up this past week right here. See this week right here? This is last week at some point. This is last week's low. You don't want to see us break through this. That will put you into some kind of negative gamma to the downside to begin closing some of those gaps down here into the week, okay? So just be aware of that. And this is last known support last week right here. So you want to see that S2 get bought, even if it just is a swing, right? Say you blast through here and then you have a capitulation move and we're right back up into upside trend. You should be good to go. So just watch this price action in here. You can break this for a minute. What you're really looking for if you're a bear is that break and then like big rejections here, and you start to break that previous low. This is the same thing for bears as it is for bulls on the upside. If you're going to get bearish for the next level down, whatever this low winds up becoming, if we start to reject the up here and then we break through that whatever that low was, you fucking hit the sell button and we're going to start bloodbathing it to the downside. All right. If you're a bull, hopefully you got the message. Past couple weeks, we've been talking about this on Twitter for 2 or 3 weeks, I think, with dates and what to expect, and it's all played out as close as you can get it to play out. Without pretty fucking close, right, for what's going on right now. So it's not like any of you that follow me should be surprised in any way, shape, or form of the price action today. There should be no surprise to you if you follow me, man. If you guys follow me, you guys know that there should be no surprises here today. This is S2 right here. And if you guys, so these are all these support and resistance levels. I post them every morning for the major indices, and so if you don't have those every day, try to get inside that at Captain's Alpha. Plot them on your chart every day, so you know where we are. So that's S2 right there, and let me see if I can give you guys a better look at this screen right here. I'll give you a 5-minute chart here, and we looked at this chart on Friday. So just right here, if you want to see it, if you want to snap a picture of it or something like that. And I'm going to expect even if it fails, I'm going to expect some demand down here. And I want you to think about that too, right? Even if we get underneath, you have to expect buyers to show up here, even if it fails, right? Even if it goes underneath, or they start pounding it and grinding it to try to get underneath this level over here. And that is S2, and negative gamma is under. Let me check a negative gamma one more time and just make sure it hasn't updated. So this morning I posted where negative gamma was, and the best gamma reading that I can get is after 9:30 in the morning. Not before. It gets kind of wonky in the late afternoons, and it can get these zero dates can impact positive negative gamma call put walls. So the best read you get typically is between 8:30 and 9:30 in the morning. So let me just take a peek really quick and see what that's saying. How y'all doing? How's everybody doing out there? You guys all doing well? One other thing, if any of you are beta testers on the triggers, I made a mistake.
Options to counter excessive rate cut pricing. So financial markets have become far too optimistic about how much the Federal Reserve will cut interest rates next year, giving option traders a chance to profit from betting against that view, according to Goldman Sachs.
Yeah, you can see the front running of no more rate hikes. Even if it doesn't happen, they're front running it right now, right? Or that's what they've been doing, front running the idea of no hikes. You know what's fascinating about this too is, if any of you have been following me for a long time, you know how I plotted out the past 2022, 2023, what my expectations were for 2024, right? And we'll get into that again because it's looking like that right now still. Even these last, you guys have heard me argue about Jerome the past couple rate increases decisions that he's made, and there's some fascinating details about this stuff and the ramifications. I'm not going to get into it right now, but if you start looking at the data for soft landings versus hard landings, we're due for a soft landing. If we get the soft landing, though, you want to see all-time highs. You want to see all-time highs, believe it or not, and come back and recheck that all-time high, and then keep going, keep going up. If we fail to get all-time highs and we start really pulling back, and this is it, we don't raise rates again. Historically, if we go 5 decisions, I think it's 5 months or 5 decisions or something like that without a rate increase, they have never raised rates again. Now, the interplay of those two things, we could end up holding rates even though we're not raising them and then just keep climbing over time, or the Fed will wind up cutting rates on a failure of all-time highs, and we will go back to check the low of 2022. Now, that would be in 2024 at some point, February, could be April, could even be midsummer by the time it's done. And then what you would have is you'd end up bloodbathing it, and the Fed would chase down to cut rates, and they would be late to that party, right? And banks know this. Banks will attempt to front run any of this and look for liquidity to chase and front run this possible downside move to the upside. They'll actually push us up, grab some liquidity, and then start selling us down from there. Wherever that upside is, if it's 460 or 480, they're going to look for it to do and to front run grabbing liquidity to send us down on that anticipated rate pause forever and eventual rate cuts. And they will force the Fed to cut rates into the winter of 2024. Now, saying all of this, right? If the Fed comes out and raises rates on the 12th, that rips up that whole program. And it resets that entire program. So the 11th, 12th of this December is going to be fascinating, okay? And however the market's betting on this happening or not happening, whether we're going to get a rate increase or not on the 11th, 12th, is regardless. That's its own separate trade right now, the front running of that. Now, it's going to be fascinating to see. This is likely going to be a rate decision that will impact the market. If you get a rate increase, it'll impact the market for 5 to 6 months. If you get no rate increase, it is likely going to signal trigger that action that I just discussed with you earlier. So I'm fascinated on the 11th and 12th. I'm sure that the banks all know this. Even the price action in the market is suggesting this happening. So it should be really fun, I guess. Or I'm looking towards it. I'm looking forward towards it. Mostly because of my fucking thesis is on point right now. So it's been on point now for some period of time. So I'm fascinated to see how it plays itself out. Matter of fact, if we get a rate increase, unless it's just a fuck you increase, maybe like here's 50 BPS, suck my balls. We're pretty much in that part of this. We're in the cycle that we've been discussing around here for the past 2-3 years. So, it would make my day to actually stay on that track. Okay. There's a rotation into small caps, and you're likely going to see a you'll see Qs and SPY should do well, but not outperform like small caps should. Small caps should outperform. There's a caveat there. That outperformance should or needs to coincide with no rate increase on the 11th and 12th. I have to say that too. If you do get a rate increase on the 11th, 12th, that front running of that action will disappear, and you should see IWM red bar straight down to the depths of hell on the rate decision day. You would see IWM just implode on itself, like literally implode on itself. So like you'll have the amplification of the anticipation of a rate cut, or excuse me, of no rate increase on the 11th, 12th, and that should amplify a positive move, a very positive move in small caps. If you get a rate increase, I would be wary of. I wouldn't even be in the front of that bus on the 11th, 12th. So if you're like long into the 11th, 12th into the 11th, 12th on small caps, I would have not like a massive penny puts against it as a hedge, just in case. Yeah, I would unwind the fuck out of small caps because we're not done, right? And that's what this anticipation is, the unwinding of the destruction of small caps and the rate cycle, right? When we start to come into the end of rate cycles, generally, not always, but generally, small caps should outperform for a period of time afterwards, an explosive outperformance. Yeah, you guys get it back. I fucked up. So I'm like, I'm
Germany's
gonna turn this
Chancellor
off, and then I'm gonna come back
coalition
and
talks on the
change some
budget.
colors.
Prices have been very
And I
constructive.
wound up fucking deleting, like, even I deleted Joe Donuts, my partner, and I deleted mine. I came this morning. I went to go turn on the because I use different. I use so from my handle is on TradingView is CaptainJimJames, and then I also own Cool Algos as well. So I use Cool Algos here in the office, and I came in this morning. And I'm like, fuck! I'm like, I deleted my own fucking tools. So I put them up for you at least this morning. So, all right. So what are we doing here? What are we doing here? There's S1 looking for S2 to the downside down here at least. You should see. No, like so. Qs are. I want you to think about something right now. Do you see how IWM is weak, but not weak like Qs or SPY is, right? And you'll always notice that Qs will have outside moves to the upside as well, right? So Qs should see more like vicious downside. S&P 500 has a little bit more rounded exposure to the market, right? So should see a little bit less damage to S&P 500 than Qs. So you should see outsized moves, and yeah, Qs are the spec growth of our market. So you should see. Oh, I got one more thing for you. What's a good day for today? Does anybody know what a good day is for today? Whether you're a bull or bear, buyer, seller, you know what a good day is today? When we have a down day, I always look for spec growth companies that are outperforming, especially the little ones, like the ones that have been released in the past couple of years. If they're outperforming on a day like today, it lifts the skirt off from hedge funds that are still long or still pushing these tickers up. It's a good way for you as a retailer to look underneath the dress and go, okay, so what are you still bullish on right now, where the whole market is in decline? You're looking for tickers that are either flat or continuing higher. So they're not selling those tickers, right? So if you can find, and as a matter of fact, if you don't find any of those, then typically if you get a few weeks to put together that's a leading indicator of a risk off type situation. So if when we're down like this, like today's a great day. If I still see tickers holding flat or only slightly down or heading higher still, I'm talking about market wide, even at just a little bit, it means we're not in risk off. Usually before a major roll, like a crash, for about 3 or 4 weeks, as we start to flatten, I'll start to see no tickets sideways or up. They're selling everything. It's like a risk off. You can actually there's actually a way for you to see before it happens. This is risk off, not a consolidation, and not even distribution. Talking like full market risk off. Not this summer either. We're talking about markets risking off right now. Every time we have that, you can actually see it if you look at the entire market. That nothing is sideways or up, like zero. They just pull that fucking trigger and they just start sell. Was it a good day to buy a dip? Possibly today or tomorrow. If I had to guess, though, if I was to be like how it normally happens, well, we should see weakness today into the close, and then on your turnaround Tuesday is when you'd be looking for that real bounce. So you guys know what turnaround Tuesday is. Follow Jedi Marcus. Get inside our Discord. David AMS can explain this to you better. Normally today you'll see like blood and damage, and then like Tuesday is your manipulation Tuesday, turnaround Tuesday, that kind of stuff. So it can happen today. If we get the right price, we can get a turnaround today. But I mean, look at this here, right? Look at this down. This looks like it wants to have a little capitulation, if not now. Could be end of the day, could be like quick relief rally, and then more down into the end of the day into Tuesday. So if you're looking for a dip to buy, just hang out. If you're a bull, just chill. You already know what to look for the actual turnaround and for the actual bottoming and all that kind of stuff. You guys that are here every day, every week, you guys already know what to look for. You know where bottom is. Yeah, that's right. Throw up Tuesday. Exactly. No, you guys don't have to do anything to get it back. We're going to launch the tool today. If you're a moderator or an administrator, you're going to go through a similar process, but a moderator or administrator process to get the tool back. And you're going to go through a slightly different process. So if you're a moderator, if you're an administrator here or in the Discord, you'll get access. But I'm going to put you through a process to do it. So the process, the reason I got to put you through a process so that I can add and take people off in the future. If you're still a moderator, no longer a moderator, and put you in the system a different way. So when we did the beta testing, it was more like, hey, give me your name and I'll just pop you in. You're going to go. So I basically circumvented going through the normal process to get the beta tool out. And so now we're going to put everybody into a pipeline, whether you're a member or you're a moderator or an administrator. So it's all fucked up. It's like, has to do with it's not interplay. It's like the interface between TradingView, the website, and everything else that we do. So that's it. That's all it is. When's the painting going up? So I got a painting up right now. You guys want to see it? So I got the painting up right here. This is so I've got Tom Lee up here back here. Or I got to point that way, I guess. That's my Tom Lee painting. I got my Mike Burry painting. So we're gonna have to decide on. Do we have a Theta? Do we have anybody for Theta that we can put up? Maybe like someone that's a great Theta gang trader, or we got to decide the next painting that we'll paint. we need a spot over there, so maybe we can think about a bull or maybe like someone that's like a Theta trader. Yeah, liquidity providers. We could do that too. We could do Ackman and Icon as liquidity providers to the market. That'd be kind of cool to do too. You know, someone else I always thought about doing was Victor Niederhofer. He's got Munger's got Munger got a little bit older, right? And Niederhofer, I think he's 92 or 96 right now. He's a guy back in the day that pissed off a lot of people, and he kind of did his own thing. He's a part of that old school I do what I do kind of a person. Before you got quants from Harvard and Yale, he was like his own kind of a G, right? He would walk around in Speedos and shit, like in the ocean with all these other like Icon types and stuff like that, and hang out. And maybe we do. I don't know what you guys want to do. We could do liquidity providers. We can do maybe a wall of some of the greats over time. We could do Icon, Niederhofer, Munger, whatever you guys want to do. Yeah, we could do Roaring Kitty too. I'd be down. You know what? That's a great one. Roaring Kitty. I like that. He's a great retail. He's a retail fucking. You know what? I like that. I like Roaring Kitty. I'd be down for something like that. Definitely down for something. That would be a cool one. I like that one too. I like that. I like that Roaring Kitty one. Like new gen. Yeah, we could do Kathy Wood. We could totally do Kathy Wood. Oh God, Yellen. We could do Yellen and what do? We Yellen and J-Pow. All right, hold on here. Here we go. There's your S2. My take is more down to come into the end of the day today. So if you want to know what I think, that's what I think. I think there's I don't think we get, well, I'd like to see it. Or I'd like to see the V-shaped recovery, one or the other. Let's see what they got down here, what they got showing on the charts here. You know, this thing that I keep talking about, I noticed that some people on social media aren't getting it. And I got to tell you guys, I got to impress this upon you guys. There's not a lot of time left into the end of quarter. So you kind of need, like, you don't have a lot of time for us to go to 4,800. Like, we need to get a move on to get there right now by, like, the 15th. Maybe the 15th hit. We put 200 points on the board, right? If we don't, right, we'll likely end up swinging down and up into 45.15 into the 31st. and then you would see the 4,800 later. As a matter of fact, let's switch over there right now. I gotta explain this better to you guys. I gotta do it with crayons, because I think I keep explaining it, and people don't like to hear it. They don't want to fucking hear it, and they gotta hear it. It's important for them to hear, and it drives me. It doesn't drive me nuts. It's just it pains my, like it really pains me for retailers to not see it. So we're gonna talk about it again. I think this is the third or fourth or fifth time we've done this, and it's horrible because you're going to end up pulling teeth on people as it happens. So we're going to look at it again, okay? And we're just going to think about this, okay? So you see how we got a magnet down here into the end of the quarter, right? End of the quarter. Get this magnet pulling us back down. You got a magnet pulling us back down, right? You got a magnet pulling us back up, right? And this is what it's looking like right now. Some kind of action like this. We pull down below 45.15, and then we swing up and slam up into the start of the year, and you get your 4,800 up here. Okay, now see this up here? We get that big squeeze up here, and then we magnet down into the end of the quarter, right? Tag that down here. We did bounce into the end of this quarter, but just note that there's a magnet down here, okay? It's very important to note that. Same thing down here. And now that we're right here, this is the 11th, 12th, right? There's that 45.115. There's a magnet, just like it just pulls us down with no momentum. So this is the 29th right here. I think this is the last day of the quarter. The thing that scares me here is that we break below that magnet and then we launch up like this, okay? So you like that push down. This is trend, right? And then we ride this up into that 4,800, that previous high from 2022, right? It's not that you don't get it. It's that it's not that you don't get it. It's that it's later than you think it happening, okay? Now let's just say we do bounce down here, right? We bounce down here and we start getting it back above the hourly trigger, and we slam up into the 11th and 12th. We get no rate hike, and we grab that 4,800. I still have an expectation of some kind of a bloodbath down into the 29th of December. So I guess you basically have to pick your poison, right? Come down here, slam down on the rate decision, and then you cross up here, right? So you got one of two directions for us into the 31st, and it's imperative for you to see where we are telling us if we're going to head up or if we're going to head down. And currently, we're a little bit weak right now, right? Currently, we're a little bit weak. We're being dragged down into that magnet down at 45.15. So we'll stick with this until something shows us if we can breach this previous high up here and start heading our way up. Okay, so that's the idea behind. $1
billion, and Fed bids for 3-month bills total $1.4 billion.
That's the idea behind that collar, right? And you should respect it. I'm going to ask you that. Like, respect that collar. Respect the collar. Respect that it's there. Know that it's there. You don't have to be like, hey, we're going to definitely be on 4515 EOQ at 4 p.m. But just know that it's dragging the market down the moment it loses momentum. So, and know that we have to get above the hourly trigger for that 4,800. So if we're above that 4,800, we back check it and we continue up. Fuck yeah, I'll ride it up with you right into the 31st. Not 31st, probably the 15th or something like that. Hey, let me I don't know who that is. Okay. So that's all I got for you guys right now. A little bit of a bounce here on the 1 minute. We're going to go back and check the 5 minute, possibly even all the way up to the hourly. Hourly is rolling down right now. It's looking pretty bearish. Let's see if they can continue to roll this down and get some more blood. Get a nice doozy down day for bulls to buy a dip. Yellen and J-Pow making out would be kind of funny, wouldn't it? Hold on here. Push that back. See if that's bottom. Let you guys watch that right there. All right. No, I'm not buying this dip. I want nothing to do with it right now. I want to see this consolidation and price get above 47.17. As a matter of fact, if you're a bull, you can trade this right here, but you already know that there could be rejection. If it does break above, you know that you could catch the cross of the 1 and 5 minute trigger and trade that right there if you wanted, but then look for the breakdown and sell down over here. So on an intraday basis, bulls have to be like bears have to be on a 5 minute or 15 minute basis. Bulls have to be tactful on an intraday basis. Those yellow lines that you just saw is the JPM collar for every quarter. That's the collar. So the collar is a dynamic thing. Price is dynamic. The collar can act as a repellent or a magnet depending upon price, and so that's the collar. If you ever want to see like downside expectations, I can show you that sometime. I actually have those plotted out. That's a completely separate thing. If you're looking for like a major role in 2024, I can give you within 50 points. I can tell you where it's going, or at least historically going back to 1894. I can show you where those levels are. We figured out the math that they use, that the algos use. Yeah, JPM is kind of a weird thing. Like, it's not a big collar. They do 3 of them every quarter. People follow them though. They pile on to the trade, and they're very dynamic. What they tend to do, the JPM collar, what it tends to do, or the intent behind it, is to limit volatility. Is to act. It doesn't stop it, but it tends to retard the market up and downside. Just like you have circuit breakers. The collar's intent is to tame the market slightly. Banks don't want real price discovery. They want a market that slowly goes up to the right and has, even when it goes down, it's slow going down and slow going up, so they can sell shit to their clients, right? They want to have consistent gains for their clients. Hey, we had one bad month. Hey, we had a bad year, but it was slow. We were able to adjust to it. You don't want to. If you guys ever want to look towards a market that has real price discovery, a lot of third world countries have a lot of African nations and some South American countries have true price discovery, and it's a fucking disaster. Their markets are a fucking disaster. So I know you and I might want that, but banks do not. They don't want to show a chart and say this is what the S&P 500 did this year, and it's like fucking went to the goddamn moon and then goes all the way to the fucking dumpster. So there's an intent behind this.
Prior bid to cover 3.01.
Yeah, it's more like a buffer. It's like it tries to like rein in both sides of volatility. It doesn't always work, but the moment that real money selling and real money buying leaves the market, it tends to work really well, right? In the options market, that's that 10% of the options market, and then 25% of retail markets can have their way with the market. And then you'll see the banks step in and they'll do real money buying, real money selling, and that it even amplifies the reining in of the collar that they want on the market. Yeah, and that's true. Like that's real true. That's really true. They're not always successful, but there's some. I don't know if I call it a fake. I mean, I believe this market is a fraud and fake. I believe that real supply and demand, the DOM and stuff, is fake. But they really do attempt to stabilize the market up and down if they can. That's what they try to do. And now, let's say the one time it doesn't work, it works the other 9 out of 10 times. So I really don't give a fuck about someone saying, hey, it didn't work that one time, right? that guy's probably a fucking loser, right? If you follow this stuff, the other 9 times, that guy's a rich guy, right? So it's important for you to understand the basic mechanics of this stuff. You don't have to understand the really, truly technical side of this stuff. If you want to, there are people that'll teach you it. As a matter of fact, Andy Constant is a great teacher of the finer points of this stuff. But you as a cash market trader, you guys always hear me, you should dumb your trading down and like dumb down what you're doing, because you can get lost in this stuff, right? You can be a trader. I was a trader when I was a new trader, right? I got really smart. Followed all the down the rabbit holes, learn this, learn that, learn this. And then when it came time to trade or invest, I would get hung up on the finer details and I would lose, right? I would lose. I'd be like, why are we not going down? As a matter of fact, that's when I became a bear, right? Why are we not going down? This is happening and that is happening, and the U.S. consumer is this and the economic data is that, and blah, blah, blah. You know what it was? It was all garbage. I was regurgitating dia-fucking-rhea. When I started to dumb down being a trader and investor, life became easier. And so I try to pass what you need to know along to you. You know, like someone like, and this is not disparaging at all to people out there that know the detailed mechanics of how all this stuff comes together and works. But they have a different mission. So if my job was to know everything about gamma, right, then that's my job, right? So let's say that person knows everything there is to know about gamma, right? The person out there that knows every little thing about gamma, right? That's that person's job. That person's job isn't timing the market up or down or trading it up and down with gamma and all that other stuff. Their fucking job is to teach you or show you or sell you a program that explains all this stuff out there, right? Or get published or get hired from a company because you know everything. Your job is a retail trader. You just need to know the mechanics of it, the outside mechanics of it, and how it's going to impact your buying and selling of this market. You'll likely become a better trader if you dumb down some of that stuff, okay? Not go down the rabbit holes and apply it to your trading, right? So that rabbit hole is not trading. That rabbit hole is not real money. That rabbit hole is not real buying and selling. That rabbit hole is not the price of fucking bread in Denmark. So it's important for you to understand that difference as you trade this market over time. And you will. If you don't understand what I'm talking about right now, they will fucking take every dollar you have until you do, right? They will burn you and burn you and burn you until you take what you need to know where the market's heading. It's hard to say that, man. I've lost so much money. My biggest losses were from becoming smart. Like literally, my biggest losses
3-month bills
came from
5.28%. Prior bid to cover
having a full grasp of why we should go where we're going to go. And we didn't. We fucking didn't. And so I'm like, fuck.
24% with a prior bid to cover of 3.01.
I think that's one of the biggest. Things I had to learn. I think that was one of the biggest things I had to get over was dumbing down why we're going or where we should go. You know, you hear it all the time. Like, why is good news and bad news bad news? Why is good news bad news? Why is bad news good news today? If you learn you can actually figure out simply why good news is good news and why bad news is good news and why good news is bad news. It's fairly easy to see once you start dumbing shit down. Yeah, exactly. All right, so I got to remove myself. I got to make a phone call really quick. I talked to Joe this morning. He says we're ready to rock, so I'm going to try to get this thing launched for you today. There's a bunch of cool stuff that's going to come out with it. We'll talk about it. There's going to be some discounts given as well. So if you're if you're this or if you're that, or you're going to be offered some kind of discount, that kind of stuff. So, and then the cool part is if this thing works and this thing actually generates some cash flow, I'm going to roll all that cash flow into some expensive ass data, and we're going to do a super cheap version of it, embedded on a website dynamically in real time so that we can give this to the masses at a very cheap cost and very cool. And it's going to be super fucking awesome. So we'll see if it works. And if it works, we'll do it. And I got a bunch of videos and stuff. So we're going to roll out some videos. You guys can consume all these videos to go along with the tool and all that kind of stuff. All right. I'll talk to you guys soon. Any other quick questions that I can answer for you? You guys have any quick questions in the discussion? In the chat this morning? Yeah, smooth brains don't overthink. They don't. That's how you see a new trader. Like a new trade was, I shouldn't say that's the exact same thing, but new traders aren't aware of a lot of stuff. They just do shit blind. And then like a trader that's like 3 to 5 years usually gets wrapped up in too many details, and they're like too committed to information that's not complete. And then when you get a little bit older as a trader and investor, you start to piece together the stuff that really matters in all these pieces, and start to put it all together. It's like you start to look at everything together, and you go, yeah, we should do this. Yeah, we should do that. It might be wrong like 3 times out of 10, but like 7 out of 10 times I'm gonna be fucking right. And I'm not gonna second guess it, right? And you're off and running doing your own thing. Are you the only one that's bullish? No, you can be bullish here. You can be bullish here, but I wouldn't trade being bullish here. It's against you to win here as being right where we are right now at this moment in time. If you were to replay this 10 times, you'd be wrong. 7 out of 10 times, somewhere in there. But right where we are right now, you'd be wrong 7 out of 10 times. I can actually count with you on the screen. If we continue to go up, like your probability of success, if we're making a turn here, as your probability of success goes up, and once you hit that 70 to 90%, that you should be in a trade then, because you'd be a winning trader over time, right? Winning traders don't buy the dip right here. I can assure you that. Even if we go up here, they don't buy it here. They wait a little bit. Trust me. That's what they do. Only time in market will prove that to you. All right. So I'm going to leave this up for you right now. The more time you guys spend with me, some of that stuff I have the data on. And who's a good person to explain this to you would be a good person to explain this to you too. He does a simplified version of this, is Jedi Marcus. Let me see if I can find his, he has a white paper for day trading this in a very similar fashion. So hold on one second. Let me see if I can find his.
So OPEC Plus cuts can absolutely go beyond Q1, according to Saudi Energy Minister. So again, Saudi Energy Minister.
Is it?
On the wires
I think we have it here, right?
Signs that oil demand is
BGL, I think, is what we do.
Russia and the
Let me see if this brings it up. I had a copy of this for you guys. If you don't know who he is, his name is Jedi Marcus. Is on Twitter. He runs a very similar program.
But again,
the program that he runs is what professionals run. So
absolutely go beyond Q1.
It's not popping up right now.
Minister, seeing some strength in WTI.
Yeah, let me see if I can find it on my. I'm not seeing it come up. So I have it here somewhere, or I had it somewhere. Anybody have that white paper by chance on them that they can post inside the chat? This is a nice primer. Let's see if I can find it. This is a great primer as to what we do. Let me see if I can find it here. I don't know if I can or can't. Can one of you guys post it for people that aren't in Discord that are just watching the show right now? We had it on a command, but I don't see it. Twitch is acting kind of weird for me. I'm not getting, like, the commands haven't been working on Twitch. I don't know why. Yeah, I haven't been seeing the commands working on my end either. Yeah. Tool works, paper trading. Yeah, this is all back testable. All easily back testable. Let me see if I can find the BGL. Here, I'll take a look for it. see if I got it here.
Just seeing the results of
I don't
the
see it
3-month
there.
bid auction here. High rate of 5.25%, 5.25% with a bid to cover of 2.98, 2.98 for the 6 month. High
You
rate
guys,
of 5.19%, 5.19%.
You guys will see me inside of the. You guys will see me on stream sometimes trade a split, right? You guys will see me like in calls, and then you'll see me add puts into my trading. You can do that with buying the market. You can also hold on a second, by shorting and buying the market is another example of doing it. And you'll see me like, you guys will sometimes see me like I'll be like long calls, long puts, stay in the calls. You'll see us continue to the downside. I'll then close the puts, take the money, and then stay long for the upside move. Yeah, hold on. I got to find it here. Let me see if I can find it here. I don't see the, why am I not seeing it here? I thought I had it here. It's sitting right on my desktop here. I'm not seeing it right now. Why am I not seeing it here? I got to go slow looking for it. And I'm amped up on coffee this morning. Woof. Yeah, I don't see it there. Why do I not see it here? Maybe they pulled it down. It's possible they pulled it down. I'm not seeing it on my end. I've got it here somewhere. I don't know where it is. I'll take a look for it. Big Balls said he placed a copy of it in the general chat. So what I'll do is I'll give you guys, if you're not a member of the Discord, I will give you a an invitation so you can go read it. Thanks for posting it in the general chat. If you don't have access to it and you want access to it, here's an invitation. To the Discord. You can go read it in there and read the entire thing. It's important for you to read the entire thing because there's some functions here, like you want to see price above. I think he does the 21 EMA, and then you want to back test it and then start running up and that kind of stuff. And yeah, trigger's ready to go, ready to rock. We are ready. Okay, so I'm gonna let you guys go. I'm gonna leave the stream up, of course. I'll stop back in as the day continues on. If there's any major any major changes to the market, I'll update you as they happen in the stream today. Yeah, it's ready. It's ready for you guys. Hold on here. It is ready. You can see this little cross happening right now. Still no cross above here. Be careful of this hourly trigger to the upside here. This could be some doom for you that's hidden to the upside, so keep your eyes on this one. If you're able to break above, normally what you'll see is price action like this. You'll see this previous high here and here. These are your traps. You'll see the squeeze up. You'll need to get above the previous high. That's this one. You'll pull back down right here. You'll see a cross take place right here. See across like that to the upside. Let me see if I can do a better price action. You'll see this right here. Whoop. You'll see this one right here. And then you'll see, and this will be your confirmation of a bull cross, right? And then you'll end up seeing some kind of a move to the upside, whoop, right there. And then you'll see the reversal right in here. And likely consolidation for a bloodbath at the end of the day. But anyways, just keep your eye right there and you can watch it. Let it bleed. Yeah, I think it bleeds too. I'm bearish here, so I'm not bullish here. I think we're gonna staircase this pitch now. Oops, I shouldn't say that. I think we're gonna staircase this bad boy down to the close. Whether it's right here or it's up here, or it's like a consolidation and then grind sideways and down. That's what I think is gonna happen to you. All right, so I'll see you guys here soon. I need to go. I gotta get this stuff up for you guys. I need to get this trigger out to you guys. This whole system out to you and all this stuff. There's a bunch of people out there that don't have access to it, that want access to it. I know the beta testers are like, fuck these guys. We got it. That's all that matters. We got to release it to the public. So when we're sitting on our asses too long with this, and it's got to get done. So I'll be back with you guys here shortly. By the way, I love all you guys out there. Oh, and hey, if you're a beta tester, let me ask you a question. Do you feel naked not having it on you right now? Let me ask you that question. If you're a beta tester, do you feel naked right now without it? Later. Hey, Flama Blanca just posted it. Thanks, Flama Blanca. So Flama Blanca just posted it on YouTube. Flama, I love you, brother. Thanks, man. I don't know if I should have. I think I should delete that. I guess I can't delete it now. Can I delete that? They're like, you're the boss. You can't delete anything you post. Can I not delete my, I guess I can't delete that shit. Whatever. All right, I'll see you guys here shortly. If you're a bull, there's easier fish to fry if you're a bull. There's easier fish to fry. That's all I'll say. Why is shield mode on? It looks like Trader Podcast fucking enabled shield mode on. Trader Podcast is slamming the buttons in the background. I just turned it off. Can I turn shield mode off now? Maybe I didn't turn it off. I got to turn shield mode off. How do I turn it off? Oh, shit. Trader Podcast, how do we turn off shield mode, man? Oh, shit. We're fucking it up. Trader Podcast, we're screwing it up, man. It's off now? Okay. Thanks, guys. Here, you guys, I'm going to draw this in for you. Let me draw this in for you. If you're bullish here, you want to see that one right there. And then some kind of consolidation in here. And then something like that right there. If you're bullish. Right in there is what you're looking for. Hopefully that helps. And this would be your previous high right here. Let me just draw some yellow boxes in for you. Make it. There. And it's key that you break these above and not below. You don't ever want to see price squeeze up here and fail. You always want to see squeeze and above the previous high. Remember that. It's like a fucking rule. Not every time, but like 70 to 90% of the time, you want to see that squeeze come way up here. And when we come back down, you might see a liquidation break right here too. And that's just to take your stops. That's an algorithm trying to take your stops, by the way. And then your second one up here, you want to see the same action. You want to come up here. As a bull, that's what you want to see. You want to see a break just above right here to give you that bullish action. Okay, if you ever see a failure of that new high on the previous high, it's very bearish, and it's telling you beforehand, like they don't have any will to go higher, and the trap would be there. Okay, so if you're a bull, you want to see that previous high get broken. Okay, these are all forward-looking signs. If the bulls are, this works on the inverse too for downside moves, and normally, if you don't already know this, some of you guys already know this. We run it on 15 minutes, half hours, and 1 hour. So the stock market trades on the hour and not your normal hour. Algorithms run from 9:30 to 10:30, 10:30 to 11:30, 11:30 to 12:30. Starts from 9:30 in the morning until 4:30 in the afternoon. Same thing goes with the Euro Open, the Japan Open, and the U.S. Open. And you want to be aware of new highs and new lows on the hour. Are we getting a new high, new low? In the half hour, we get a new high, new low. On the 15-minute, are we getting a new high or a new low? And it tells you, it infers to you the strength of buyers and sellers and where we're headed. If you're a trader and don't use the clock, I would beg you to start to look for start looking at a clock, because the clock is going to tell you a lot too. And they do this on a daily basis, on a weekly basis, on a monthly basis, and a yearly basis too. So that clock on a daily basis, that intraday clock, they do it on the weekly, they do it on the monthly, they do it on the yearly. A lot of this stuff. So David AMS and I were talking about it, and he's like, I think they know. David's like, I think they know what price is months in advance. And I think he's right. I think David is correct. And I think David has decoded a lot of it. So they know before we ever get there where we're headed. Or at least the algorithms know where we're going outside of unknown events. And actually it proves his point too. Proves David's point, because whenever true unknown news comes into the market, we always revert back to the previous price. Always. That's if they didn't know about it, okay? Now, if they did know about it, we'll continue in that direction. But if they didn't know about it, 99% of the time, price reverts back to the original price every time. So if you don't know who David AMS is, he's in our Discord, and he's one of the guys that, there's like 10 to 20 guys in there I trust, and he's one of them. You can always explore that with him further. Can someone try to make a comment on Twitch, possibly, that's not a moderator or an administrator? I want to make sure that the chat is open and Twitch for everybody. All right, I gotta go. Later. Thanks, Turkey Nugget.
Want to get it right. They don't want to suffer another embarrassment like they did earlier this year, Carl.
The thought is better to be late than wrong.
Exactly.
Steve, question, how much is each of these companies devoting to this particular product? Is it one where OpenAI was able to kind of use a war chest, so to speak, of capital to put toward this and able to get it out therefore faster? And does Alphabet?
I'm gonna move that. I'm gonna move this over here so you can see the actual price action.
But it's not cheap to make this stuff. But you got to keep in mind, OpenAI has the advantage of this relationship with Microsoft. Part of that investment that Microsoft made in OpenAI isn't just cash, it's cloud space. So OpenAI has this ability to have access to all that cloud capability through Azure, through those NVIDIA chipsets that Microsoft can provide in exchange for a part of the company. So that's part of it. And we are hearing from all these companies, Microsoft, Google, Amazon, how much they plan on spending in CapEx while helping other cloud customers reduce their spend. It's going to be a really expensive process. Also why we're seeing so many of these companies try to develop their own chips in order to make it cheaper, Leslie.
Good stuff, Steve. Thanks. Steve Kovac this morning. Coming up after the break, we're live in Dubai at COP28 with the vice chair of S&P's Global Sustainability Division when we're back after this.
FUMA.
Welcome back. The UN Climate Change Conference, COP28, taking place in Dubai right now. That's where we find our Diana Olick, who joins us with a very special guest. Diana.
Well, Leslie, in the first 4 days of this COP, governments, businesses, investors, and philanthropies have pledged over $57 billion across the climate agenda. So joining me to talk about how all that money will be deployed is the Vice Chair of S&P Global Sustainable One, Richard Madison. Thanks so much for joining us. Tell me first, you sit on a huge amount of financial intelligence. So are the capital markets really ramping up enough to finance the clean energy transition?
Yeah, so we have around 700 billion data points on climate change that we refresh every single year. And we actually monitor. When you look at the Inflation Reduction Act in the United States, we've been tracking private sector flows of money. This is not the disbursement of loans or tax credits. It's private sector capital market money. It's $100 billion in 10 months, in the first 10 months of that, after that act. So when you compare that with some of the pledges and some of the things that we've seen here, $100 billion mobilized in less than or around 10 months is remarkable. And we're seeing that across the world in various different ways.
Wow. So what is the level of opportunity for the Fortune 500 companies to take advantage, not just of the clean energy transition, but climate adaptation and things like risk modeling and climate tech even?
Well, actually, risk is mispriced right now. That's the bad news. That's what we see. So when we look at risk, we would see that, for example, we've just released a study that would tell you that on the current trajectory that we're on, up to 4.4% of GDP on average across the world will be lost.
Really?
And if you bring that to today, the US government, in its 5th national assessment of climate impacts, has said that, that the scale of damages that the US economy is currently paying is about $1 billion every 3 weeks on average. So when you think about it, that impact and the cost of physical risk is actually significant and needs to be compared with the opportunity of transition. And quite often those two narratives don't stick well together.
So do we have enough risk modeling? It sounds like we don't if these companies are mispriced.
Yeah, so we've released another study that looks specifically at companies, and what we found is that for the S&P 1200 companies, on average, when you look at the actual assets that those companies own and where they're located and what kind of climate hazard is going to hit those assets, we found that on average, about 3% up to 28%.
Watch out for a liquidation break here.
Value by those companies. And so, what does that mean?
Yeah, what
There
type
should
of
be a
assets
back
are we
test of
talking
that,
about?
bull cross.
Power stations, mining plants, you know, ports, all those kind of critical types of infrastructure. So the point is, on the current trajectory that we're on, we need to do something to adapt to that risk or lower the emissions trajectory. It's one of the two. And what we can say is that, roughly speaking, adaptation costs more than moving fast on climate change.
Okay, so we've talked about a lot of money coming in.
Hey, sorry, I just read that. There's a crazy loud humming. You guys are hearing a loud humming?
Yeah, well, it has the...
Holy shit, what is that? What the fuck is that? Jesus. I hear the humming on my side now. It's off. I turned it off. No, I hear it on my end too. Dude, that was coming from one of these websites I have open in the background back here. I just killed it just now. What the fuck was that? That was gnarly. It was like, fuck you. It's coming from CNBC. Pornhub. I see that. It says someone said sell everything alarm. No. It's just a, I think it's just probably something on the end of CNBC's website. I'm going to switch over here in just a moment. I got to input some new gamma for the market. Heads up to you that the gamma flip is now the gamma flip is now 45.15. Heads up, 45.15 for gamma flip. See if we can switch over really quick and just take a look at this chart. So here's all your gamma stuff. We are squeezing right now, nice fat squeeze. So you guys can snip this from home. One quick second here. This is a new gamma picture for you. So if you're looking for gamma, your gamma flip is still at 45.40. Your support lies right down here. So this is your support. As long as this holds right here, we can go up. You don't want to see this break right here, this little zone right here. So let me draw this in. So still bullish as long as we stay above this right here. Again, my picture's changed a little bit. So we got to make this green to buy. Right there. We start breaking down below this green to buy, and it's going to be blood. So if you're a bear, you want to get underneath this 45.10-ish to get your bear on. This is the support. Not a bunch of support. It's not as much as it looks. Only 7 million, 33 million, and 22 million. So this is support. It's just not that strong. So just be wary of that. If you're a bull, that this is kind of weak. But other than that, you can see that's where the ping pong is right here. Right there, trying to develop some kind of a floor for SPOOs. If you want to snap this at home, you can. Hold on, let me see if I can. Right down there. If you want to take a picture of that for home, you can. Anything below this, bad news for bulls. Should I post this on? I don't know. Should I post it on Twitter? I don't know. Here's that trade. First one up here. Hopefully you get that squeeze right now. Right there should be that squeeze, and then watch out for a pullback for the consolidation for a slam through and above the hourly trigger. Someone asked me, do I think that do we still think HT and bleed down to the close? Trying to read what you guys are writing right now. What do I think? I think that eventually that support breaks. I think it's into the second or third week of December. I think that we staircase down, like we go down here, slam into that support, that gamma level, and then we come back up, and then we slam back down into it. You should see IWM outperform, and you should see some kind of a bloodbath heading into, like, I think it's the end of this Friday or the 11th or 12th, something like that, 15th. I just took a look at the gamma profile. Give me one quick second here. 12:30 on Friday. This is that top of that gamma wall right there. Hold on. 12:30. It's that gamma wall right there. That yellow bar right there is that gamma wall. iMessage. I don't even know if this is going to work or not. Hello? Can't hear shit. Hello? These dirty fucking bears are gonna try to fuck. These fucking dirty bears are gonna try some bullshit in here. Also, just be careful if you catch a breakdown here, get bought right back up and send it straight up here.
Just taking a look at the markets, the Dixie currently up at 0.52% on the session.
Just had a nice break on TNX just now as a heads up. All right, so as we come up here, you want to take the money off the table. So we're going to come up here. We got this previous high right here. As you come up here, you're going to take the money off the table, right? You should see a squeeze up. Should see a nice squeeze up, and then a come back down. And you want to watch this one line right here come back down, and you want to see price hold on to that white line. Watch that red line come up. Maybe you grab a quick break right here for another explosive move to the upside. See it right there. Right there. That's your first one right here. And then your second one should be wham, straight up in there. If you're long calls here, just keep raising up the bottoms of your calls until we slam up here. If it does reverse on you, that you don't lose all your money. So just keep raising the stops as you push up. $4.57. There's that target right there. Nope. You want me to check NQ for you? Hey, Bink, you want to look at NQ or Qs? I'll bring up NQ right now for you, brother. You want a snapshot for NQ? Right there. Here you go. This is for you, Binky. So right in there. This is NQ, by the way. You got a little bit more room to run. Target's 15.9, 3568. 15.9. You want to snap that for yourself, Binky? You can. Done, Binky. No worries. Hey, Binky. I'll get you. Hold on a second, Binky. Let me talk to you in a minute.
Treasury 10-year yield rises 10 basis points on the day.
All right, so I'm going to stop in with you guys really quickly here. I want you guys to see something here really quick, okay? It's an important thing for you to look at here. So I want you to see the anatomy of a reversal and the places to make money and the places of risk. So, and I want to talk about the few, like this applies on every time frame: 1 minute, 5 minutes, 15 minute, 30 minute, 1 day, even weeklies. And this is a great structure right here. So, let's say we had a reversal. This is up or down, doesn't matter. You could flip this chart upside down, it wouldn't matter. But I want you to see something. So let's say you get price above that 1 minute trigger, right? You're looking for that check back. If you begin to head higher, you can take that trade to right about there. And this is a pretty decent trade for money, okay? Now, you would actually get out of that trade, right? Or keep the risk on for that squeeze, but then that back test that's successful, you can usually run that up to your next resistance point. That's right there in there. And then in here, we got going on here is you could have actually captured this too. This is actually a pretty good trade right there. Gets you doing pretty well. Now, when we come up into this major resistance right up in here, it's dangerous. What you can see happen here is you could squeeze this up and above back here, but it would still come back down and want to bounce and consolidate. It can fail in here. So the trade is kind of in here. Does that make sense? That's where the meat of your trade is. Now, if you're like, hey, I'm getting bullish here, Cap. Look at all this awesome structure in here. Everything is awesome. But we do have the hourly trigger above us, right? The smart trader takes his money and run in here. The risky trader says, fuck you, I'm going to raise my stops at least. If I get stopped out, no big deal. If there's liquidation break, I'll jump back in for that actual squeeze above. Now, the other thing to make note here is had we even squeezed up right here, right, you would still expect some kind of a pullback and consolidation awaiting for that 1 and 5 minute trigger to come up and grab you to propel you to the next resistance point above. So this trade is not quite dead right now. It's actually still alive. We can easily go back and recheck this 5 minute trigger because we already know this is resistance, right? And we want to make sure that these buyers are serious to break above. Now, even if we do break above here, you want to wait for that consolidation or for that pull, for that retracement, and then get really super bullish for a 3 trigger cluster to the upside. For right now, be a 3 trigger cluster. So don't be too scared in here. So right now, if you are long still here and you haven't gotten stopped out, or if you're trying to buy a dip, this is the place to buy a dip. If you're long here and you're like, do I cut long? Do I do this? Do I do that? If this does reject and we start heading lower, you'll still likely be given a chance to unfuck yourself. So you could see a bloodbath down here, right? And then you would actually see a reversal bar straight up, back up here. And before it actually starts to rain to the downside and you get the reversal on this kind of stuff over here and start heading down. So even if you're panicking now, just make sure that you're orderly. If you're long here, make sure that you're orderly in exiting and not just panic selling on a pullback right in here, okay? Does that make sense? So just try to watch these mechanics as this stuff unfolds. It's fairly consistent. We're talking like 90% of the time. So if you're still long here, stay long, raise your stops, all that kind of stuff. You get a liquidation break and you're just flat right now and you're looking to actually buy a dip to squeeze up, you might be given that opportunity on a check back on that 5 minute trigger. You don't get bearish here until you actually see this cross start. Make sense? So you'd be looking for you to be starting to get bearish here. You want to see something like this, and you want to see something like this, right? And you want to see some kind of blood, and like you'd be wanting to see blood down here, but then you'd be given a chance. Oh, like 90% of the time, not 90, like 70% of the time, you'd literally see the failure right there on that previous high, and that's where you would exit your long. Not until this happens in here. Now, you might get taken once in a while where it just starts blasting down, but we're talking like 90% of the time, you're going to be given an opportunity to get out of that long position or even a re-entry into that long position to the upside right here. Now, we used to go over this like all the time, like over and over and over. We don't normally go over it as much as we used to, but There's a place to cut and there's a place to raise your stops and look for another entry for that blast up. If you're wondering if we're going to squeeze above this hourly trigger, I will tell you this. This is the downward momentum in the market right now, this green line, and they're not going to give it up easily. These even if we squeeze, so let's say we squeeze, right? Say we squeeze up here. These fucking sellers are going to try to jump right back in and send this stuff right straight back down again. That's why you're looking for that bounce here on the hourly trigger, the rejection or the buyers to just push right up right here and grab it for that extreme bullishness. Okay, that would be counter to sellers. So just note this is our first time up here, and this is where they want to step in. I want you to know too, we're underneath the hourly trigger. If you're a seller of this market, this is your place somewhere in here to step in to sell this shit back down to the depths of hell at the end of the day. Just be aware of that right where we are right now. You guys understanding any of what I'm talking to you right now? If you're a bear, right? If you're a seller, you are selling right here. This is your first place to sell as a seller, right there. Just as you come into this hourly trigger, even if it squeezes up, right? So look at this from the seller's perspective, right? Look at this from a seller's perspective. This is where they sold you down. Hold on, let me get this trigger screen up. This is where they sold you down right here in this hourly trigger, right? And they're going to step right back in. If I was you guys know I don't sell, right? I do sometimes. If I'm long a position, I'll sell to cover. You guys know I'm a bull. But I'll tell you what a seller's position, I'll tell you what a seller does, okay? I want to tell you what a sell side does right here. They step in on this hourly trigger, right? And they're going to attempt to sell back, and they're going to sell the 5-minute and the 1-minute once you're underneath it, right? So when we come back into this hourly trigger, what they're going to do is step back in, okay? So let's say they step in to sell this hourly trigger, and let's say they get squeezed. Woo, we squeeze up, right? They already know. If I was a seller, I would already know that whatever squeeze comes up here is likely going to reverse. So even if I'm going to get kicked out, right? So let's say I start the short right here. We squeeze up. I know this is coming back. So let's say it squeezes up and they beat this previous high right here, right? They beat this. I'm like, oh shit, I took a short. They squeezed it all the way up here. And I already know that the bulls are stronger than the sellers, but I also know one other thing. We're likely going to retrace all this, consolidate to make that move higher. This would give me the place to get out if I'm wrong as a seller. So there's no reason for a seller not to step in here on this green line. Does that make sense? So if you're sell side, you fucking sell this. Even if it squeezes up, it's going to come back down and alert you if they broke this previous high back here. Now let's say I put the short on right here, right? And the bulls, let's say I put the short right here. I'm just like, fuck you, short, right? Let's say we squeeze up here and we don't breach that previous high. Right? And we start coming back down right here. And I'm in short right now, right? We start coming back down here. I'm actually not afraid. I'm like, fuck you, I'm still short because you failed to get that previous high and you're weaker than the buy. The buy side is weaker than the sell side. Does that make sense? If it doesn't make sense to you, if you watch price action like this every day, on the up or down side, you will see it become more clear to you, okay? You'll see it become way more clear to you. And that's why there's that risk as we head into this hourly trigger. You guys understand? I was going to show you my face, but I got everything off right now. I'm going to go back to this main screen right here. You guys understand where I'm coming from here? This is buy side, sell side. Doesn't matter. And this would reverse. This would be a reverse. If you put this chart upside down right now, you would be expecting buyers to step in on the hourly trigger, right? If this was in reverse right now, you'd expect a buyer to step in and try to buy this hourly trigger. And not unless we broke through that hourly trigger, right? And started to go up again, would you then, of course, this would be in the inverse. If we were heading down, the same thing would apply. Does that make sense? Anyways, some of you have been around for a long time that understand all this. Some of you have not, and we'll learn it over time with us. So what? So let's say you're along. Let's say you're trapped up here, right? So you're trapped right there along. You didn't have stops. Okay. Let's see if you're given a chance at any point, even if we get a bloodbath, to get unfucked. Yeah, I wouldn't be long here. Personally, I would be out of the trade. I'd be in this part of the trade. That's it. You guys always call me Captain Paperhands because I never want to deal with this shit up here. If I were to take another long here, it would be something like this. I'd be looking for the squeeze up and then the back test and a successful back test. And once we're above this right here, I'd jump on long right about there.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Shortly expecting the results from the Fed reverse repo facility. So seeing here 84 counterparties taking $815.847 billion at the Fed's reverse repo operation. So again, a small audience today of 84 counterparties taking $815.847 billion at the Fed's reverse repo operation.
Okay, so this is kind of a key place right now, all right? What I want you to be doing is paying attention to, this is called a back check right here. They're going to back check this 5 minute. You're going to find out if there's still buyers here or not. If you don't see a big ass squeeze, right, or at least above this one right here, right, you'll end up seeing a liquidation break and then a failure. You'll see like, hold on a second here. What you'll end up seeing is, hold on here. If the buyers are still here, you're going to see a high right here. Okay, if the buyers are no longer here, you're going to see possibly blood and a failure right up in here. And you'll see that failure begin right there and start heading us down. So we're going to find out right now if the buyers are still here and if they're not. We're going to find out real quick here. All right, so we're gonna. So what we're gonna do here is we're gonna watch this price action here, and we're gonna see. I want you to think about if you were long up here, right, where that pain trade took you to, and then you have any ability here to unfuck that pain trade. Let's take a look at one other thing too. What I want to bring another thing I want you to focus on your own is I want you to compare where SPY is to where IWM is. So did you notice earlier today that IWM was able to get a new high on the day? They got the new high today. It looks like at Monday at 1 p.m. They got a new high from going back to 9:30 this morning. So at 9:30 this morning, you had a new high on IWM, and then you had a new high again on IWM at 1 p.m. And just watch that. Watch how they're just buying the dip on IWM down here. It just keeps grinding higher and higher and higher. What looks the healthiest here? Is it IWM or SPOOs? SPOOs can get bullish, but where do you get the overperformance? And it looks like the overperformance right now is on small caps, even if SPY is able to hold itself up here. But I really want you to think about if you were long right here, do you get an opportunity on this bloodbath to at least unfuck yourself before, if there is a roll to the downside, are you given that chance? Now, it won't be every time, but it will be 70% of the time. So I'm going to go with my projection here that you would have been given a way out if we do roll. What up, Sparky Jackets? How you doing, brother? Let's see if that happens. Let's see if Captain Jim James knows what the fuck he's talking about or not. So, and I want you to also think about this. How many people come back to you and say, oh, like I got rolled here, I got stopped out, and then it came back up. You ever hear that in social media? That's this action right here. How you guys all doing out there? How you doing, Sparky? All right, hold on. I'll be right back with you guys in just a second here. Now, for maybe an intermediate or advanced trader, right? If you picked wrong here and you get rolled down and they give you the chance to get back out up here, which would put you right back right here, right? Even if we go up, you would wait for the pullback down here to reposition yourself to the upside, okay? Love it. Dude, so I drank Mountain Dew, a TJ88. I drank, so what I did was I went to Costco yesterday, I think, and I was like, I don't want the pizza, I want the hot dog. And I went to the soda machine, and they had Mountain Dew, and I was like, I'm going to have a Mountain Dew. First time I've had Mountain Dew since I was eating chicken tendies and Code Zero like a decade ago. It was disgusting. Matter of fact, I didn't even finish the soda, and I didn't finish it, and I filled it full of ice, and I was like, that shit was like, it felt like, it was wild, dude, just the feeling of having that shit get down my throat. Well, there's a bull out there, and he's like, please, please, just go back up one more time. There's like a bullet here that's like, please, 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 just go back up one more time. And there's a dealer here that's like, nah, we're gonna fuck you. We're gonna put the pain trade on for you. Fucking terrible. Fucking terrible. This is bearish too, by the way. Not seeing this right here. Pretty fucking bearish. Let's see what happens here if these bears get a blood. But you should see a bloodbath here in just a few moments. They sent it back up right here. Gave you a chance to get out. And if you had seen a nice squeeze right here, you'd say, yeah, we're super buyers. And you're not seeing it. So with that, you're watching that right here. You should see a pretty significant bloodbath to the downside. Let's see if they can get it. Maybe we'll do a double bottom for the bulls. They always like to say that, double bottom. Let's see what happens here. They get some fucking puts maybe. Hold on a second here. Maybe I'll partake with you guys. Hold on. Let's take a look here and see if we can get any action on this. That's 454.55. 455s. They're 13 cents right now. See if we can pull this bad boy back down. Let's take a look at this. See if they can start rejecting this. What I'm looking for is this right here. Something like that. And then something like that. And I'll take that put. Only though, I want to see a new low. I want to see a new low down here. Otherwise I don't want to get stuck in the middle. What the goat says. What does the goat say? It says, don't ever get caught in the middle, right? Don't ever get caught in this nonsense in here. Yeah. I don't want to be anything to do with any of this stuff in here. I already know exactly what this is. This is Diddlin in the middle if you don't know who the goat is, but he's out there. He's got a kick-ass channel, a long-time great trader. So don't get caught in this. I want to see that nice new low down here and start chasing this to the downside. VIX looking a little bit bullish here. HYG flattening a little bit. So I'm all neutral right here, not really bullish or bearish. Also, TNX today is acting. We're trading against TN. I was watching TNX this morning, and TNX is impacting the market, likely due to the shit that's going on in the Middle East right now. And there's a bear out there right now that's like drooling here. He's fucking drooling. So if this was inverse, right, for bulls, you'd be, if you're a bear, right, you'd be snapping a line right here. And you want to do a little line right there that's yellow. So this would be the inverse, right? And you want to see a break of the previous low. So you want to see a rejection here. And then some action like that. Then you take that short and you'll blast down to the depths of hell. So just keep your eyes on this. Doesn't mean it's going to happen, but if you're a seller, this is what you're doing. If you're a seller, you should be snapping a line at home right here and looking for that break of the previous low. And then you would see the cross down here and blood. Still no trade here. I'd be setting up some shorts, though, just in case. You got 5 days of golf and the Pac-12 championship, Sparky? God damn, man. And you spent a week in fucking Vegas? Ooh, I love Vegas. I love it. I was just, a matter of fact, so I was supposed to go skiing this weekend, dude, and it ended up raining. No snow. I was gonna jet and do a bunch of skiing, and I got to get back out west for the winter, and I still haven't made plans. All right, I got to get back to what I was doing. I got to get back to this and call Joe real quick. Get back with you guys in just a minute. Yeah, the only way I'd be personally, the only way that I'd be taking a short here is if you have the second break of this one back here. No short for me unless we break. Still like or just neutral here. I'd want to see the break of this previous low right here to get bearish. You got condo access to Steamboat? Hey, Sparky, hit me up, man. I'd be down to go to Steamboat, dude, for a weekend or a week. I wouldn't bring family or anything. I'd be down to come out for like 2 days, 3 days or something like that and ski with you. Ride with you, whatever it is you're doing. If you ever want me to come with you. Yeah, fuck yeah, bro. I go to Steamboat. I like Steamboat. This winter is going to be epic too. No, you know that, right? Like, it's not going to be epic in the Midwest, but in the West, it's going to be fucking. It's going to be even more. I think it's going to be better than last year in the West. I think the West is going to be. I follow a bunch of guys on YouTube, and it should be a banner fucking year. Like the Northeast and the West should get hammered, bro. Also, heads up, I've got roofers here. So if you hear any noise in the background you shouldn't hear any noise, but if you do hear any noise in the background, I got roofers working on the house. So I apologize in advance. You're going to put a tropical dome over the house so you don't have to deal with snow? You guys want to see Tesla really quick? Hold on. See what Tesla is saying. This is let's go to a 30-minute chart on Tesla. Ooh, nice. Yeah, right down there, right? See that little thing down here? Tesla is bullish, but consolidating right now. So it's just parked on its daily trigger. Nice little dip buy down below there. You see that? Look at that sexiness right there. Bam, bam. I do expect even with. I'm going to show you guys something. Hold on. So this is that. Let's go through a couple things here. Hold on. Hold on here. Okay, so Tesla, right? Let's talk Tesla. So let me mute that webcam crap right there. Okay, so Tesla, right? It's kind of one of these things where you got a bunch of resistance up here, right? You got a lot of volatility to try to start making breaks to new highs up there. Now I've got this little bit down here, and the reason that I got this So let's say Tesla consolidates in here, right? Like ping pong, ping pong, ping pong. Then you have like that moment of whoop, and that's the dip that you're supposed to buy. Okay. And why do I say this? That doesn't mean it's going to happen, but why do I say this, right? Why does Cap think that you're going to get that quick dip down and you're going to be able to buy that awesome dip? And I'm going to explain it to you better right here. Hold on. Let me see if I can bring this up here. Give me one quick second. Let me see if I can bring this up really quick. Like, why is Cap saying that all the time? And let me show it to you in a better light here. Okay, so this is the seasonality chart for SPY, okay, or SPX. And I want to draw your attention to all this stuff right here, okay? So what ends up happening is you get this ping pong, ping pong, ping pong, and then you have that one moment of capitulation and then an upside move. And I want you to draw your attention over here too. You know, this is January, right? So you end up getting that January effect, right? And so that's my point here. I'm going to show you right now NASDAQ seasonality. See if we can pop that up really quick. And I want you to see like that slow grind down. So here we are right here, right? So you have like highs and lows and highs and lows. Then you have that one moment of down, and then you should have taken the up into the end of the month. Does that make sense? So just with looking at these triggers here, right? It's kind of making sense right here, right? Kind of matches up, and you're just looking for that sweet spot, just like that. Oh yeah, the market's doom and gloom. You know, it's like you wake up tomorrow, you wake up next week, and you guys know how this goes, right? Everything looks awesome. Trade this up, and then one morning you wake up and it gets blasted down, and that was the dip that you buy for that run, right? Same thing with IWM. You get people that get stuck in IWM for a week. They grind you down. They burn your options, all that kind of stuff. And you had this like sweet little spot down here to just grab and run. So I guess if you really wanted to, yeah, you could be buying this down here right now on Tesla. But if you think there could be a quick bloodbath down, if this would ruin your day with options, there's probably a problem, right? Or a spread dated farther out in time, then you really don't care if we do bloodbath down here. The one thing that I would say to you is if we do get that Tesla blood, as long as it does, if we get that Tesla blood, as long as it doesn't start doing this and heading lower and breaking that previous low, your upside targets are still valid. So all in all, you guys want to see this on Tesla? I'll show it to you. Still bullish on Tesla. Want to see it right here? Bottom dip buy, bottom dip buy. It looks like some day traders are in here buying all this shit. Buy it, buy it, buy it, and they're just looking for that move higher. And this is your trading zone right here. Right in here. You need something fundamental or market fundamentals to squeeze you above this vol up here as they try to sell into you. So like bullish, tacitly bullish, all that kind of stuff on Tesla. More this Tesla, or my take on Tesla is more like, how exacting do you want to be, right? Do you want the exact? This is the bottom for Tesla. This moment on Tesla. Let's look at that SPY really quick. Let's take a look at the hourly velocity, and it's coming back right now, but hourly velocity looks good ish. But I'd still like to see that velo come down here a little bit and then buy that hourly velo, because this is all good. Daily velocity is bullish, but just that little bit of weakness, and then grab that. And we can bounce off zero line and hourly velo if we start to get new highs on it. But until that happens, we're above the hourly trigger. But if we're not above the hourly trigger, not too much going on right now for that bullishness that you're looking for. I'll leave that up for you right there. Yeah, Bork. It's like Tesla. It's like personally, if I were to talk Tesla with you 10 times, I would be on the. Let me look at Tesla one more time. you know, I could be wrong here, but if it was me, 226, and 226, right around that 228, 230, it would be like some kind of bullshit capitulation in pre-market or after hours, some kind of nonsense, and you're like, why is it down that low? And that doesn't always happen, but that's where I would be looking to be like, fuck yeah, man, we get all this doom and gloom, and Tesla's bleeding down. Tesla's bleeding down, and everybody's crying and all that stuff, and there goes me like, hey, yeah, fuck yeah, man, buy calls right there. We're actually bullish. So if it was me, like, I'd set an alert like 240, 236, somewhere in there, 238. And not that you're gonna get there, but if you did, my alarm bells would be going off to buy that dip for continuation on the upside for Tesla. Yeah, if you set enough of those alerts, set enough tickers, you're gonna win. You'll be winning all day long. And like, if you miss a Tesla, right, but you were to set alerts like that regularly on your favorite tickers, and only when that one pops up for you, you're gonna be styling. You're gonna be a happy guy. Be a happy guy. They're gonna blood this fucker, right? Look at him. Look at a bloodbath. Buckle up, bulls. Buckle the fuck up here. Put your seatbelts and your crash helmets on, bulls. You just thank God that you were obsessed with them so early and hold ancient shares and terrified of their options these days. Yeah, I fucked up. I used to own Tesla from like $10, and I've made not a lot of mistakes. I've gotten very greedy with Tesla. One of the biggest mistakes I made with Tesla was, in that greed, I should have maintained the shares and should have separated the shares from the options trading that I did. That Bitcoin, I got all kinds of stupid stories, dude. I was in the I was in fucking Wall Street Bets too, man. Like, I got so down on myself. I remember there was a day, I think it was Labor Day or Memorial Day, and I was sitting on Wall Street Bets, and Elon showed up at like 4:00 in the morning, and all the bulls had leaps, and they were just getting fucking destroyed. Like, they were just talking about like $500,000 in leaps worth, 90 grand, 70 grand. All hope had lost. All the bulls left Wall Street Bets. And I remember that morning distinctly. I think it was a lemon or an orange tweet or something that Elon made, and talked about like the armies or the Knights of Elon, and how like things were going to change. And I remember that weekend after that weekend, these bulls, man, they had lost all fucking hope, and it never came back, man. It just ran. It just started running, and it was fucking epic, dude. If you remember that, Bork, it was fucking beautiful. It was one of the most beautiful things I've ever experienced. It was as beautiful as the GME run. Couple like gorgeous moments in as being a Tesla bull, or whatever kind of bull it is that you are. I don't know if you remember that or not. You had 19 BTC. I do. Oof. I'd have fuck you money if I had never sold. I owned it when it was worthless. I was fucking using it on Silk Road back in the day. I was going to like Burning Man and shit, and my wife, dude, had me sell it. I needed money, and I had just had a kid, and I needed money, or I was having a kid or something, and I ended up selling. I see what I think happens here is so Evan and even in her garden is asking a question. So what I think that you get is you get outperformance for the rest of this week from IWM, and you see underperformance by SPX and NASDAQ. But I think ultimately IWM joins in with a downside move, like a capitulation move, and then we get a better move on both those, on all three together. And I think you see outperformance into March with IWM. There's a caveat there. if we get a rate hike, right? Run from IWM. Run. They just reset. They just reset another 5 months on IWM. Yeah, there's now I would say to you this: if you see no rate increase, you don't need to see a cut. You just see no rate increase. I will be you'll likely see me switch to a full on IWM bull for months. We might even stop trading SPX and SPX and Qs here. You gotta remember that once we started that rate increases, dude, like they annihilated small caps. Like they just came in and just fucking destroyed small caps. Seatbelts, bulls. Put your seatbelts on here. Watch that yellow bar right there. This is a key moment right now. If you see that little poke down here,
So
a
just
little
keeping an eye
poke
on the
through,
markets and
it's
late
pretty. It's
afternoon
going to be
trade
ugly. You
here.
got
The
a
S&P is down around
bull plane or a bear plane right
0.75%.
now crossing.
The dollar, according to the Dixie, up around 0.6% as well. Unusually quiet day of
You need to
news
see that
headlines today,
break.
or
You
lack
need to see a
thereof.
break right there.
Analysts are noting that Wall Street has kicked off the week with losses, with both stocks
You wanna
and
see-
bonds down in a signal that traders' aggressive pricing of interest rate cuts by the Fed may have gone
455.76.
too
It's
far.
literally to the tick. Believe it or not, it's to the tick. We'll tell you. Yeah, if you ever watch the algorithms, how they work, these little fuckers will like leave a tick behind. 2 ticks, they'll leave a tick. If they don't leave the tick behind, it's fucking bearish. You know, like if it's or bullish. These fuckers, these little computer programs will get this shit like to the tick. Believe it or not. If they don't get that tick, we're bullish. Like even right now, if they don't get that tick, we'll be bullish. They need to get that last tick. We're going to try for it right now. Watch them. They're going to try to break this right now. Let's ride this penny stock to the ground. Beartown Sheriff, you short right now? 'Cause I'm about to play some bear music here, man. Oh, we're not there yet. Haven't gotten the tick yet, but we'll play it. They're foaming at the mouth. I promise you. There's bears at home right now in front of their desk, and they got just drool coming down right now for blood. There's your new low. Fucking disgusting bears. Fucking can't stand bears. Filthy fucking dirty bears. Oh. Fucking bears. How do you live with yourselves? Can't stand, but I do love you if you're a bear, by the way. If you're a bear, I love just fucking with you. All right, so you got your new low here, right? You might get one more entry up here. Let's show some targets for bears here. And what are we looking at? We know we're looking for the previous low, right? So we're going to go right about here. Whoop. And drop that one in right there. See if these bears can get us down here. Same as for the bulls, right? You might see one more squeeze up, and they're going to try to send this bad boy straight down. You got one more thingy right here. Let's put another one in there. See if the right there. Hold on. Fucking bears. I'm a buyer, Cap. Like you, well, the tape says you're not a buyer. The tape confirmed that was a lie. You're not a fucking buyer. Nino's like, the Bears have had 4 months of total control of my main stock, so no, I'm not going to give them any love at all. Oh boy. Fucking, who is this? Mike Burry at home doing this? Like making free money. Free money. Remember all those people from this morning that was telling you that was the bottom, right? Not quite just yet, is it? Not quite just yet. Oh, shit. Otabunga, is Miro chirping? Barry hitting the sell hotkey. Not quite yet, right? Hold on a second here. What do we got going on here? Yeah, no trade for me today. I'm I think that someone was asking I got a trade on right now. No, I got doing a bunch of work in the background, and if I take the trade, I can't do the work. Yeah, flush this shit down. Let me show you this right here. Show you why that box is right there. We have that box right there because if sellers break through it, it's a new low in the day, turns into Super Bear Town, and then right in here is one more. Just the speed bump. It's a little bit higher. It's like right there. And then we have S2 down below. We never tagged. We've left that little bad boy down over there. So don't forget that S2. So if we get super bearish, we'll see a bloodbath down there. Still no bloodbath, but there's still no new low in the day. We are in a, if any of you guys watch this stuff, this box right here is telling you the positioning is short. This switches, this one box right here switches from red to green. That's the one you want to be watching if you're short or long. Miro's chirping right now. I bet you Miro's in this stream right now. He might not tell us that he's here, but he's probably here.
Analyst commentary here, so it is worth noting.
Let me check shot for you right now, Matt.
Jobs readings
take a look,
over
brother.
the next few days. They will be closely watched for clues on the Fed's next steps. So we do get the release of the U.S. JOLTS, job openings, ADP employment,
spicy baby,
non-farm payrolls.
Yeah, shot was squeezy, wasn't it? Shot was squeezy, dude. I didn't want to talk about it on the stream because I'm like low float down at $1.50. I'm like, I can't talk about it on stream, dude. Good job, Matty. Good job, brother. Matt called out shot last Friday. You guys called out a couple of those tickers that were at like $1.50, didn't you? That were like they had to go up. They had no choice but to go up. Yeah, right on that. Yeah, Nenvax was the other one. There was list off. Do me a solid, Matty. List off inside the stream all those tickers, man. You guys called out like 5 or 6 tickers that were. You guys called out like 5 or 6 tickers that were fucking like once at $100, now trading $1.50, just waiting to get fucking squeezed. Hey, Henry Abato, what's up, brother? What's up, my brother? SSTK, my man. Let's see. Come on, Bears. Oh, these fucking Bears, dude. They are winning the 1-5 right here. Let's see if they got this. Or if we go into consolidation, dude. Come on, Bears. This one should be lower. This one should be right here. Right there. Right there. I might take a trade with you guys. Hold on. Man, I'm looking at this fucking. I'm looking at the option chain right now. They got 411,000 calls on 456. And grind those fuckers to dust. Someone in the chat said they were short from up here. We'll see if they get pushed out or not. These sellers trying to sell this back down right now. From the looks of it, they're not paying on 457s right now. Thinking about grabbing some 457s to go. It's so cheap. They're gonna try to pin this shit in the close. All right, give me a second here. Looks like ping pong. All right, hold on a second here. That trapping fucking bulls, trapping fucking bears. So glad I'm not trading this. Let me see here. Let's take a look at something here. See if we give you guys a snapshot here. Gamma. Do I have the right levels in here or not? Just check these levels and make sure this got saved. Awesome. Okay. So we're going to go into trigger screen. Okay, so this is what I'm going to give you guys, all right? Here we go. So here's going to be your update for the rest of the week. Expectations for the rest of the week here. Get out your snipping tool at home. Whoop. This is the gamma on SPX, okay? This is the gamma on SPX. We have a large node up here. That's 4,600. All right. This is 4,650. And we need a lot more development to the upside. So here's 4,750 right here. This is 4,701. And I don't see anything at 4,800 right now, okay? So top of the market has improved at 4,750 on SPX. Now, what I'm going to say to you is this, very simply, okay? what I would be doing is buying the dips, selling the rips, buying the dips, selling the rips, buying the dips, selling the rips. If you see us begin to get over and consolidate above 460, we can talk about taking the trade to 4,800. If you see at any point blood and we start getting underneath this gamma flip, right? We'll start talking about blood in the marketplace. That makes sense? Otherwise, you could probably easily trade this zone trading, right, in here. Now, I will give you a caveat here. So you trade this all inside here, right? Now, I'm going to give you a caveat to this trade here. And that is that if we continue to, do this kind of stuff, seasonality tells you that we're going to have a bloodbath down here heading into, I believe it's the second week of December. So just keep playing this, trading this on the inside. If you see us come down, buy a dip with stops underneath. If you see us, I guess you could put this right here. Whoop. And do a little yellow box down here if you wanted to buy this one right here. And then you could do this one right here. There's a yellow box up there. And then top of the market's right up here, way up here. 85. You got a lot of bulls believing in that trade. We'll turn that one red. Right up there, that's sell the news. Does that help for you? Right there. If you're a bear looking for how low we can go, right now the options market is saying that bottom should be erasing just that stuff down there. Make sense? I'm gonna bring this together for you. Oh, I got that in the wrong place. It's up here. And that one is right here. Hello. And then you put another green box right here. So if you're a Marine, that's what you need to know right there. Snap that if you want. So this idea here would be this, right? You get above, you're a buyer to there. Start breaking down below right here, and you're a seller down there. Otherwise, you're stuck in chop right in here. Bam, 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 bam. Make sense? So that's the first thing I have for you. Take a snip of this at home. Can you see all this? Here. Take a snip of that at home. And then we're going to switch over to Weeble. Okay. You can always come back to the program and snip that for yourself. Post it with your friends if you like. I don't care. You can claim it as your own. I'm not one of those people that's like, this is mine, this is yours. You can just say this is mine or whatever. Anything that I do, it's free. Hold on here. Okay. Now, knowing that right there, right? What do we know? See that? See this box? Remember we drew this on Friday, right? We said even if we squeeze up here, I think we said something like even if this squeezes up, we're going to expect that pullback down in the rest of the week, right? And kind of looks the same way right now, right? Even with this bump down here, right? Kind of looking for that kind of action, in down, right? And then back up and then back down. So until we get above this red bar up here, even if we squeeze up here, close that gap out and then come back down, right? You're still expecting to trade this range. So you're basically at this point range bound, right? Trying to find out if we're going to make that leg up to 4,800 or if we're going to make that leg down into some blood. And, we've got, this is what, Monday right now, right? You got Monday, Tuesday, Wednesday, Thursday, Friday. Don't forget, what do we got? We got Jerome Powell coming out. And look at that. Here we go, right? 11th, 12th, right? That Jerome Powell. It doesn't shock me that we're in here. And you have to make your decision on which way we're headed. I'm going to assume here that we're going to get this. We're going to finally get the we're going to finally get the decision once we get into this week, if we're going to go moon and hit that 4,800, or if we're going to go to the depths of hell down there and start closing gaps to the downside. So otherwise, you're going to be trading this zone right here the rest of this week. Now, you'll see some people out there that'll say, yeah, if we're going to sell the market, they'll squeeze it up into Jerome Powell. And if they know that we're going to go to the moon, we could, bleed down into Jerome Powell so that you limit some of the upside exposure. Dealers will do that as well to limit some of that exposure into this rate decision coming up next week. But right now, you just trade the zone and then get more bullish above and more bearish to the downside in SPOOs. So be a buyer down here with stops underneath. Be a seller above be a seller above with like if we come up here like this, right? You're going to be a seller right here with stops above, just like that, okay? Now, what is my expectation into tomorrow or today? You already know what my expectation is, right? I already told you this morning. I said, we're underneath the hourly trigger. As long as we're underneath the hourly trigger, I'm bearish, right? So I have more expectation of downside to come into this close or even into the open of Tuesday. I won't be getting bullish in any way, shape, or form, even on the intraday, unless we get above this hourly trigger. So even just on an intraday basis, bearish into the close. If you have turnaround Tuesday, right, you get some turnaround Tuesday in there, and the bulls are all happy, woohoo. Come up to that hourly trigger, maybe even launch up into Wednesday over here, right? Now, before you know it, the week is over, and you're trapped into Jerome Powell's Christmas colors, dude. Look at this Christmas colors they got going on here. Yeah, turnaround Tuesday. I think the bear's going to go take us down on the close. That's what I think happens. Now, there is a caveat to this. I'm looking on the fucking options chain right now. And let me see if I can put my can you guys see my camera or not? Oh, you can't see my camera. Oh, I turned it off. Hold on. There is a caveat to this, and that would be that if there's no real money buying or no more real money selling out there, and I'm looking at the 0-to-8 option chain on SPOOs, they got 420,000 calls on 456. If I had to guess, right, and I was a dealer, I would try to murder those fucking calls down to like 6 cents, 3 cents, and maybe let them close in the money being in 456 to 457, and they'll be worth like 7 cents or 13 cents. If I had to guess, that would be my guess on what a dealer is going to do, unless you get that real money buying, real money selling in. So park it sideways, bloodbath it down. Park it sideways, park this thing sideways, and then maybe bloodbath it down and hit that bottom fucking bar. Yep, turn around Tuesday, baby. Turn around Tuesday. And they just grind this shit. They just grind this right into the close. Now, if you're trying to buy dips on IWM into the rest of the week, let's look at that really quick. Let's take a look at the difference. See how price is below the hourly trigger here, right? All right, not too bullish right now. Let's check out IWM and see what it's saying. And let's take a look and see what it's saying right now. This is a 1-minute chart. Look at the beauty of this fucking chart. This fucking thing, look at this. They're like, come on down to the half-hour trigger in the hourly. Bam, buy it, right? Come on down. Haven't quite gotten there yet, but I'd love to get down there and buy that, right? So if you get any chance to buy IWM, if you get another chance, look for 185.30, 184.30. And as long as that holds, see how we're above the hourly trigger? This is all bullish right here. You see that the difference in structure here? This looks gorgeous, and I would expect all dips to be bought on IWM. Let's take a look at one more thing on IWM here. Now it's a little bit toppy here. This is pretty high here. The daily is pretty high. You could see a pullback into next week on IWM, so all this could get pulled back. But as long as it stays above its hourly trigger, right, I'm bullish. And as a matter of fact, even if it comes back down into this 175, I'd be a buyer down here. You can see they're trying to sell this down right now, and your next target is going to be 192, 197.71. So if you're at home and this looks a little bit long in the tooth right now, if you are looking for a pullback, or a 50% retracement, something like that down here, I don't know that you get it right now. I think they front run this shit. Where there should be a pullback, a significant pullback, I'm gonna guess that it's not gonna happen, and you're gonna see that 200 quite quickly. I will say this to you: if you are an IWM bull, your trade is the trade is dead if you trade below 184.17. So if you see a failure in here, and you see a bloodbath here, and this starts to reject, and you get that new low here, like right there, your run is dead for now. So be aware of that on IWM. Yeah, I'd really be interested in seeing where if we can get spoos to like bloodbath down into the close and take IWM, cool off IWM. You could see another giant fucking squeeze on IWM if spoos gets a nice bounce. You get to understand how this like works. Like if spoos is weak, let's say into the close here today, right? So you get the pullback on IWM, and then SPY is like underperforming for the next week. Like, yeah, you come back up, you trade it up, and you trade it back down, and you're like waiting for SPY to actually have that bloodbath. Meanwhile, you get IWM just like boom down there and then rip fucking faces off and outperform. The Bears fumbling the ball. Yeah, diddle in the middle. Paul's Cellos, don't diddle in the middle, baby. So yeah, that's the next expectations. So any weakness in spoos, be looking to buy that dip on IWM as the point, I guess, more refined point or something like that. Where you get the underperformance from SPX, you're going to see the overperformance from small caps. Let me ask you guys a question out there. If you're watching this stream right now, let me ask you guys a question. I'm not going to do a poll right now, but let me ask you, do you, well, it's two questions. First question is this: is anybody on Twitch really good at the back end of Twitch? Anybody out there right now that wants to or can help out with the administration, like and it being an administrator on Twitch? Not a moderator, but administrators. Has anybody been a streamer ever on Twitch and understands? I don't understand a lot about Twitch. Anybody out there at all? If you do, you don't want to say it publicly, can you try to DM me or send me an email at CaptainJimJames, CaptainJimJames@gmail.com. My second question to you is, do you think we get a pause or 25 or more BPS at this rate decision? Let me ask that on Twitter too. And do me a solid, will you? I'm going to ask you guys a favor here, right? I'm going to ask you a big favor here so we can get a good answer here. I'm going to ask you guys to do me a solid here. SPX Spy ES. Do me a big favor here because I want to get a good sample size. This will only help you. I don't care if you're bear or a bull. I don't care. You'll care about the answer to this. So do me a solid, because this does impact you. It's going to impact how we look at the market. So do me a solid. I'm going to post this. I'm going to do 2 days. Leave it up for 2 days. I'm going to make a post on FinTwit right now on my normal handle. Can you do me a solid and give it a heart and repost it?
NYMEX diesel January futures settle at $2.65 a gallon. NYMEX gasoline January futures settle at $2.13 a gallon.
Do me a solid and repost it,
NYMEX natural
please.
gas January futures settle
And
at
ask people to answer what their
And finally,
thoughts are. Be
NYMEX
honest
WTI
in your
crude
voting
January
too.
futures settle at $73.04 a barrel. That's down $1.03 or 1.39%.
I really want to gauge what the sentiment is from retail traders. I see some of you guys are reposting it. I appreciate it. The more reposts it gets, the better we'll get a better answer. The more voting that we get, the better sample size we get. Appreciate that, guys. Thanks, I appreciate it. I can see you guys are reposting it right now.
Do you want to stay up to date with the latest?
Let me see if I can make sure you guys are voting too. I see some of you guys aren't voting. Try to make sure you vote on that
for a year's worth of our service for the price of 1 month and save 92%.
Make sure you're voting too. Even if you're not going to repost it, try to vote it. I really want to gauge interest from you, gauge your insight into what you think we get. I'm going to read some of them off to you right now. Right now, I got 80% no increase. Holy shit. 10% saying 25 BPS, 6% saying 50 BPS, 3.1% saying rate cut. So far, 65 votes so far. I appreciate you guys reposting this. I'm gonna pin it too because I'm interested to see what retailers think. I don't know what we're getting. I know this. This is what I know about the rate increase. Is that what I know about the rate increase is I'm sure that the Fed is hyper aware. If they don't increase rates, the reaction to it. This is probably going to be this will impact the market for 5 or 6 months, possibly 10 or 12 months. This specific rate, I would say 5 or 6 months because they reset. If they rate increase, they reset they buy themselves breathing room for historical purposes. I do want to make you aware that historically, if they do not raise rates, if they don't, right, this cycle is done. I'm gonna write that in here. Historically, if the Fed does not raise rates, this meeting, the cycle, the height cycle is finished. I'll post that in there too. And it'll be fascinating. It's going to be now if they do raise rates, they bought themselves another 5 months, basically. So I think they're aware of that. I think that they know that if they don't raise rates, the implications. This morning, I'll show you guys something else from this morning. Now, you guys have heard me talk about this for years now, right? There's some stuff you guys have heard me talk about. I want to bring this up for you right now. I'm not going to put why is it not showing right now? Give me that pro shit that I had. Hold on a second here. Hold on, I got something I gotta do here. Okay, I'm gonna show you something. This is from CNBC. Oh no, what the fuck is that? Oh, god damn it. Hold on a second here. want to show you guys something here. Why is that not coming up here? 9 a.m. When did I read this story? Okay. No, dude. Hold on a second here. One quick second here. I saved the article to the archive, but I want to show you this. Now, I'm not in agreement with this. Well, I am to an extent, but I want to. This unless you pay for Pro, you don't get this, I guess. So, so let me mute the chat box really quick. Let me mute my camera really quick so you guys can see this. So this is an article from this morning from CNBC, published on Monday, December 4th at 9:31 a.m. J.P. Morgan's top chartist says S&P 500 to tumble all the way back to 3,500, retesting the bear lows. Now, that's not guaranteed, but what this guy is saying here, what this guy is saying here, right, is that basically what he's saying is if you don't get new highs to back test from 2022, right, that Wyckoff is telling you that we're going to go back and test 3,500. So I'm going to scroll through and read it to you really quick. J.P. Morgan head of technical strategy Jason Hunter said the S&P 500 in 2024 is in for a stark reversal back towards its bear lows. Okay, stock should pull back, and in my base case on the technical side, the S&P 500 is going to drop 3,500. Hunter told us CNBC Squawk Box on Monday that move represents a roughly 20% pullback from benchmark current level. Hunter pinned this bearish outlook for the S&P 500 to a looming recession risk that could come to fruition despite a soft landing and hinder stock prices as a result. Now, I want to show you something here. His point here is that he's telling you if you don't get a nice new high, that you can back check, right? If you don't get that that high, that you can back check that, or even this to continue on to the upside, right? If you don't get that, traditionally what happens is without getting that previous high way back, not there, but way back over there, actually. 4,800, I should write. So if you don't get this 4,800 right now, right, so that you can back test 46 and even possibly 44 to continue to the upside, his point is basically if you get stopped out below 4,800, Wyckoff is going to tell you that we should go back down and revisit 3,500 in 2024. So here, let me keep scrolling down over here. When you look at the timing since curve inversion and go back into the 1960s and take yield curves that go back that far, as you move into next year, as that window continues to progress, you tend to find your way into a bear market that's eventually associated with a recession way more often than not, Hunter says. There is a caveat here. There is a caveat to this statement by Hunter as well. And the odds are stacked in the favor of this happening. I agree with that. But what Hunter is not telling you is that if you were to look back on every instance of this happening in the past, right? You look at every instance of this in previous history, we're due for a soft landing. So you have like hard landing recession, hard landing recession, hard landing recession, right? You end up getting one soft landing. And if you go back every, like he's going back into the 60s and before, we tend to do it just like this. Hard landing, soft landing, right? So hard, soft, hard, soft. I think we have one more example of four recessionary bloodbaths, but then we got another one. And fascinatingly enough, in all of this, guess what we have right now? Hard landing, hard landing, hard landing. So we are actually due for a soft landing. Just speaking from a probability standpoint, we are due for a soft landing. So don't take this as like God speaking, even though he's the top chartist at JPM. He's leaving a little bit out here. He's not giving you the full picture. If you want me to show you that soft hard landing chart. I will dig it up today and post it on FinTwit for you, where I can actually make this look like dog shit. So I guess everybody could, but I'll post that for you today. Now, he also goes on to say, and because markets are pricing in the expectation that the Federal Reserve will cut interest rates in 2024, such a scenario suggests a weaker stock market, he said. Hunter's forecast is in stark contrast with more recent market moves, which saw the S&P 500 reach its highest close for the year on Friday. It would also erase essentially all the gains the benchmark has made since the start of the year. Now, there's a caveat to this, too. If we do get that soft landing, you will see us trade 4,800, backtest 46 and 4,400, and just continue on to the upside. The rally could last, what else did he say? They're saying here, signs of the market deceleration already appearing and underpin his base case for the benchmark. Now, we can actually check that. So look, he's saying right here, look at this right here. He's saying, Hunter's forecast is in stark contrast with more recent market moves, which saw the S&P 500 reach its highest close for the year on Friday. It would also erase essentially all the gains the benchmark has made since the start of the year. Hunter added that while a year-end rally will continue into the end of 2023, signs of the market deceleration are already appearing and underpin his base case for the benchmark. We'll check that right now if he's right or wrong. We can do that right now. The rally could last maybe a little bit longer, right? This is where we talk about getting the 4,800 after the first of the year, right? Remember this morning you saw me on FinTwit say, yeah, we can hit 4,800, but we either have to get a fucking move on and get it done by the 15th, right? We got to get it done by the 15th, or we're going to come back in January and try to tag it. So this is all in line right now, right? The rally could last a little bit longer, but it's also starting to decelerate to the point where our algorithmic base signalings are already starting to show that you should be lightening up positions and starting to hedge at this point already. I agree with that statement down below. Hunter's comments are in line with a previous market forecast from November 21st research note where he said he had expected the downturn to materialize in 2023. However, a more resilient economy short-circuited the view and effectively kicked the risk-off can down the road. Hunter also noted that the index could return to growth in 2025, which could turn out to be a positive year if the Fed eases rates in 2024. Let's take a look at what he's saying. Because I actually know what he does. I know what he does. So we're gonna
settle at $78.
We're gonna go to the trigger screen really quick, and we're gonna take a quick peek at something here. Okay, hold on here. We're gonna do something really cool that I bet he does while he's snorting cocaine and banging hot chicks or hot guys or whatever it is that he does. So we're gonna look at SPX, and we're gonna go to a daily chart. Now, you're going to get access to this from me, okay? And we're going to take a quick look at something here, at what he's talking about. Let's see what he means. Let's see what he is talking about. Now, on a daily, on this daily here, I have more triggers. I've got quarterly triggers, right? I've got 6-month triggers. I've got yearly triggers. Why are these important? These are important because when we do Bloodbath, we can see tags of big lines down here, right? We got a monthly right there. We got a tag down here of 2020 and a recovery, right? We can actually look back historically, way back in time, and we can see where the bottoms of the market have been. This is 2008. Can you imagine being back here in 2008 and saying, we're at the bottom, and you could have called it? Right? We had actual fraud in the marketplace, and we knew where bottom was with fraud in the marketplace, right? We knew where fraud was. We know that if we crash, what normal crashes look like, right? We know what fraud looks like back here. Same thing in 2000. If you want to see 2000, I can show you that one right there, right? So if we have fraud in the marketplace, this should be the worst that we see, right? That gray line, that slightly gray line, that major gray line down here. Right? The greatest trick the Fed ever pulled, was what? They gave the market time, right? They gave the market time to trade sideways, to give all this down here, right? To give all this fraud time to move higher, right? Time is passing. Right? So even if we get that bloodbath, not going to be as bad as you once expected it to be. right? So way up here, we had high risk of going boom straight to the depths of hell, right? Trading 1600, and as time has passed, the damage to the S&P 500 has become less. Our bottom is now at 2,000. Was at 1,400. Now it's at 2,000. Fed's done a good job, right? They're protecting your. Even if we bloodbath, they're protecting the downside for you. We have a high probability of never revisiting this back here ever again, believe it or not. As a matter of fact, the last time we've done that is 1930, I believe. I think it was 1930 for the in World War II. World War II and the Great Depression is the last time. I can show you the Great Depression here if you want at some point. But what is he trying to say here? He's trying to tell you, right? He's trying to tell you that we're losing velocity, right? Well, losing velocity. So let's look at velocity and see what he's saying, right? Momentum in the marketplace. And the market is already showing signs of distribution, even if price isn't showing it. He's telling you that because of this right here. Even though prices are higher, right? He's telling you that the monthly velocity is going down into zero and negative. He's correct on that. We're also showing signs of lower highs on the weekly. These are the two most important velocity indicators for you for stock crashes. Whenever you see declining highs on monthly and declining highs on the weekly, right? Declining highs on monthly, declining highs on weekly, even if price is up. So when you see a divergence in velocity on a monthly and weekly time frame, it is warning you that a major roll is coming. Major roll is coming. So if you're looking for where should we tag next year, what this Jason guy is saying, this Jason guy is telling you no matter what we do here, right, we're going to have that bloodbath in 2024. And where is the target? Right now it's 3470.87. And if you're going to time this by quarter, we're likely going to be 3,500 in springtime right there. So that's why he's calling for that bloodbath into 3,500 in the springtime. And are we in a fraud right now? No, we're not in a fraud, are we? This would be the fraud trade down below, right? If we get fraud or it becomes public, sure, we can trade lower. You would then expect 2814 and possibly 2098. But without fraud in the marketplace, the worst damage that you should see into 2024 would be 3,500 down here. Get it? That's why he's calling for that. That's your back check right there, 3,500. That's the worst that you should see. And to that point, where did we tag down here? Almost to a pinstrike on that monthly trigger, right? Isn't that fascinating? That pullback was almost perfect pinstrike for a correction down below. Almost pinstrike. So that's his call, is that we're going to head down and you'll see a low. That would be the most negative, unless we get fraud. And I mean fraud like if you're old and you remember banks kicking a can down the street going on CNBC trying to raise fucking $100 billion. I shit you not. Literally going on CNBC and begging for money from other banks. Unless you see some shit like that from like a JPM or a Wells Fargo or, I don't know, Carl Icahn out there fucking kicking the can down the road because some bad real estate decisions or whatever it is. Unless you see that, bad commercial real estate would be the way, by the way. Likely, if there was fraud that's going to come out and fuck some shit up, it's likely going to be commercial real estate. Now, outside of that, if you're a bull and you're looking for that dip buy, it's right down here, right? That's your expected low in 2024. Now, I will say something here to a bear, and that would be if you see at any point a market come up here and trade this right here, right? You can just scratch the fuck out of that 3,500. You ain't never getting that. You'll see a back test, and sometimes you'll see a trough check. And so you would see like the worst case being about 4,000 inside of February, April of 2024, possibly summertime. If that is what's going, if we end up trading up here, that would be the worst damage that you would see in 2024. If we fail this high up here. Notice how this is a year chart, right? What does this look like? This looks just like a 5-minute or 1-minute chart that we trade, right? This looks just like it, right? So if they get up there and they make that new high up here, right? They get that new high up there. No matter where we go, we're bullish to the upside. Make sense? So the key for you as a bull for 2024 is, you ready? From now until about January or March, the key for you as a bull is you want that new fucking high. This one right here. I don't give a fuck if it's a tick strike. I don't give a fuck if we come up here and we fucking tick it just 1 point above, right? Bullish. And Jason can suck my balls. Now, if we fail that shit over there, right? Jason is right. And you're going to see that pull back into 3,500 in 2024. Am I pulling it all together for you guys out there or no? Let me know if I'm not or I am. I'm going to tell you guys, right, on this run, if we don't go up there, I'm going to warn you, if you're a bull, if you are a bull, right, this is the same shit as a 5-minute chart, a 1-minute chart, and why he's telling you this. You have to a tick, get one fucking tick above that 2022 January high. You don't need to go any higher, just that high, and you've saved yourself and you get your soft landing. If you do not get that tick, right, we will go to the next level below that blue line, that monthly trigger. You will see us head down and trade that 3,500. I assure you of that. You will find more. You're going to go down and look for the real support down below. So, if you're a bull, if you're a bull, you should be begging and hoping for a new high on the high of January 2022. Now, the question being, do I think we're going to get it? Right now, the monthly velocity is saying no, and the weekly velocity is saying no. They're saying that we're not going to catch the new high in January 2022, and that we are actually going to roll down there to 3,500. And then we can go up there, even though velocity tells you we're not gonna. And we could actually, we can still go up there, but the banks are betting against that happening right now. And they have been wrong, man. They have been wrong. So big thing here. Price action will be king on this stuff. Like, if you are a, look at them parking this shit. This is such dog shit. If you're a bull, right? All you want to see is that new high. If you see that new high, that 3,500 call can eat a bag of dicks. Straight up. That ain't ever happening. If you don't see that new high, and you see the seasonal weakness comes into the year, like the timing beats you. So like if you don't see the 4,800 now, if you don't see the 4,800 in January, if we don't see that, right, or that previous high from January 2022, and we start rolling down, we will send that shit straight down to 3,500, guaranteed. Do I think they'll let it happen during an election cycle? I don't. It looks to me like they're trying to. There's like, if they were to let that happen, if they were, I mean, they're gonna try not to. They are gonna try not to. They can, if Jay Powell doesn't raise rates, and if Jay Powell doesn't raise rates, and we start ripping faces off to that 4,800, we blast above it. What I would have like a I would say that your pullback would be 4,000. In 4,000 would be your pullback for 2023, and that's reasonable. That's reasonable. But I got to tell you something, man. If we traded back to 3,500, that's where we traded last year. It's not really bad. Think about that. So you're like, they won't let that happen, Cap, and I'm like, if they trade us down to 3,500 in 2022, which they did, right? And we come back to 3,500, is it bad? For Biden, probably not. Biden saying, "Hey, look, I fixed." Not that it's real, but hey, look, I fixed. I made sure that the bottom was in 3,500, and he's not gonna say 35, but he's gonna say the market's traded sideways, but it hasn't gone down. You haven't seen a new low from 3,500, right? So they're in the clear there. Their bases are covered. Like, I think Biden can absorb the market going to 3,500. Abso-fucking-lutely. You can get that double bottom on S&P 500. We can continue to the upside, and he still looks good. He's saved pensions, right? He's saved 401ks. You got to remember, like, the lows of 2022, right? That 35.7, I think it was in 2022. They didn't crash 401ks and pensions, did they? So that's all they need. So as far as I know, from looking at this, if we bounce off 3,500, I don't think it's bad for Biden. Now, if we went down to fucking 2,000 or, you know, some kind of something really ugly like 1,600 or something like that, yeah, dude, they're going to fire his ass. That's 2008. That's 2001. And they will fire him. You'll see a lot of blame going around and that kind of stuff. But he would still look like he's saving the markets, trading us to 3,500. And guess who would be the happiest? Fucking banks. A bank would love nothing more than for us to trade like 3,000 to 4,000 every fucking year. Or not, like 3,500 to 4,000 every year. Bring it back to 3,500 and bring it back to 4,000 every year. They would love that. You know, you get a nice fucking yearly low, you get a nice yearly high. Now, that doesn't always happen, right? We know that we continually go up over time, but they try to retard that from happening. So I don't know if they're a loser for us heading down to 3,500. I think Biden is fine at 3,500 or higher. Yeah. And look, there's something else. Yeah, I think this is a good point. Bulls for Trading just said, I'd love to see 3,500 to load the truck again. You know, a bull wants to see 16. I know you don't believe this, but an older bull like myself, and a bunch of guys that I know, we want 1,600 or 2,000 or 2,800. The more capitulation you get, it's a generational buying opportunity. So, like, generational. Like, I could buy that shit for my kids, and my grandkids would be set for life. So, don't always believe that everyone doesn't want to see that. Like, only bears want to see blood and death and destruction. I personally would love, and there's a bunch of gunpowder on the sidelines, right? That gunpowder is for that possibility. Not just the 3,500 pullback. Like, that gunpowder is like, please just give me that generational buy. You know, look back on 2008 or 2001. Those are generational buying opportunities. If you weren't a trader then or an investor then, dude, it was fucking a disaster. The cacophony in the news was, we're never coming back. We're never gonna, like, you're never gonna see the stock market recover from this. And we saw a lot of years of sideways and under performance after both of those events. But dude, I'll tell you what, they are generational. If you ever get that chance to get in those generational buying opportunities, if you're young, like 18 years old or some shit, and you see that, you buy it with you fucking sell everything you own for cash and you buy it. And you just sit on that shit for 20, 30 years. And it is it's like crack cocaine to buy down there. So there are a lot of bulls that want that. You might be like, oh, no, I just want to keep going up from here. But I'll tell you what, there are some bulls out there that are alive and have been alive long enough to have seen those buying opportunities and would buy. You remember fucking Munger and those guys, man, they were buying the fuck out of that stuff, right? Mike Barney was down there buying. All these guys were down there buying that shit. They know what that shit means. So, I don't know. 3,500? Possible. I see where he's coming from. I see what he's saying, and I see why technically he's calling for that in 2024. And you guys have already heard me say, fucking 2 years ago, I told you guys in October where the bottom was. I told you guys that in 2024 you should see that major roll down, and that would be the bottom. That will be the bottom, whatever that pullback is. I don't care where it is, 4,000, 3,500. And Jason was saying that too this morning. So. You see, whatever that bottom is, whether that bottom's 4,000 or 3,500 bucks, 2,800, 2,000, whatever it is, I don't care. That shit is gonna trigger a 3 to 5 year bull run minimum. Minimum 3 to 5 year bull run. All right. That's all I got for you guys. You guys got my thoughts on the rest of the week. You guys know where the support and resistance is. You know where the gamma is. And you know that you're a buyer above, buyer below, or otherwise you're trading this zone for the next 4 or 5 days. Any other questions right now? How does IWM look into next year? IWM, I'm not going to show you right now, but I will tell you this. Your whole thesis relies upon being bullish on this rate decision for outperformance. And if you get a rate hike, and you're going to wait. You're going to be waiting if you get a rate hike. So you'll get some good performance this year, or early year, but you're not going to get the performance that you want unless we're done raising rates. And they will try to run that shit. They will try to run it and run it and run it and run it. Sam, I apologize for not calling you. I just called Binky out and talked to him in I think a week. So I'll try to give you a shout, man. Have been having some problems with my iPhone. It's all fucked up. I'm on an Android now. I got nobody's phone numbers, nobody's contact information. I got all kinds of problems going on. And now I've got a bunch of like missed text messages. I'm like slowly working my way through them to find out who each person is. I love all you guys out there. I love you, Bull. I love you, Bull, for trading, man. So, you know, this rate decision is going to be. Now, here's option C. You ready for option C? If they do not, or if they raise rates in this, if they raise 25 BPS, they reset themselves. They can drag this shit all the way to the right and up sideways for another fucking 6 months or so. And with normal pullbacks like we had, like a pullback down to the monthly trigger, that kind of stuff. So all this is predicated upon continuation higher for longer that Jerome says is happening. And then the rest of us that kind of like, yeah, we don't believe you, dude. Like, I don't believe you. I don't believe you, Jerome. If he does, well, I guess if he does, if he does continue higher for longer, you can kiss away your soft landing. I'll tell you that. If he does higher for longer, you ain't getting higher. You ain't getting a soft landing. He's going to destroy this whole thing. So we'll see. He says he's not trying to do that. So if he manufactures that, I'd be fascinated to see it because he will manufacture a deep, dark recession, if not a depression, for higher for longer. That's what it does. It gives us depression or guaranteed recession and guaranteed or a high probability of an actual depression. I shouldn't say or an ability to have a depression. Not guaranteed, but an ability. That's why you see people when you see some of these guys, when you see guys like what's his name is I forget his name, is a guy on Twitter right now that's like, hey, follow this guy, follow that guy, follow this guy. And these guys already know if they go higher for longer, they are going to trigger a major recession. What happens if he raises 25%? He resets. If he raises 25%, you're going to see a reset, or not. He's going to reset this whole front running of rate cuts. And what we'll do is the same action we had this year. Slowly grind sideways and up and have normal pullbacks until we go back to this point again. We'll be right back where we were, what we did this past year. Kind of crazy, right? You probably see a low of 4,000. You're not going to see, you might see 5,000, 4,500 again next year. It'll be like the 50s and 60s on SPX. If any of you guys are big macro historians, you can look back towards the Volcker years. And while he kept doing that, the market just kept grinding sideways and up, would have a pullback right down to the monthly trigger, come back up and ride again, pullback. And then the moment they started cutting rates, that's when you saw all this action that you're looking for in 2024. Oh, thanks, Bork. I will. I'll hit you up today, bro. I haven't been on. Well, I'm not. A lot of you guys don't. I think I have a lot, dude. Like this, it's hard for me right now. Like the interaction is it just consumes lots and lots of time in the day. I don't have enough time in the day. But Bork, I'll look out for you today, brother. I'll get on DMs and check it out. I appreciate Bork you offering, brother. All right. So what else we guys need? You guys need anything else I'm gonna leave the stream up, but you guys have any other questions right now? Any other big questions that you need answered or big macro stuff? Do I trust those guys? Yeah, anyone that's responding, I've known for some period of time. Chase Winter, this pin sucks. I've been wasting 2 weeks of my time. Chase, dude, you're going to be waiting another 5 or 7 sessions, brother. Or possibly, I should say, possibly waiting another 5 sessions for what you're looking for blood. What do you guys got there? AMD, trading with the market. Trading with all the rest of them. All right, I think that's it. All right, I'm going to get back to what I was doing, and I'll be back with you guys soon. I'll be with you here until 4 p.m. Watch out for that sell into the close. Watch out for that momentum, man. I don't know if you get it. I don't think you're going to get the downside move only because of the calls. They'll like pin it to those calls, but if you do get that weakness into the close, I'd be interested in buying the close or possibly the open tomorrow. I shouldn't say that to you guys because what they can do in the overnight, futures traders will sometimes put price where they want it, up or down. If the cash market can't get it done, so you can see the weakness in the close, futures market would send it down, and then you'd have the buy on the open tomorrow. So just sit on your hands if you're a bull. Just relax, chill. Sam saying grab some calls into the day with you. No, man. Possibly. Let's see what the price action is in the close. It's possibly I could buy some calls with you. I want to see the close. I'm interested in some 0 dates, but only depends on where the price is on close. All right, I'll talk to you guys soon. I'll be here. I'll be in the background. Dude, can you guys imagine? Like, I was checking out a live stream the other day. Like, man, like some of the rants that some of these guys go on. I'm like, these guys don't know what the fuck they're talking about. They have it has nothing to do with the price of fucking. What they're talking about has nothing to do with the price of the fucking stock market. Like, can you imagine just sitting there all day long and doom and glooming the fucking economy and assigning that to the stock market? Fucking stupid. Probably shouldn't be saying that. What up, Will? Corporate buyback and also corporate buyback window and the tax loss harvesting should have that January effect on IWM. Gold should trade right along with S&P 500 in my experience.
So looking now to the early market on close imbalance, currently sitting at 562 million to the buy side.
Price action making my eyes bleed here, boys and girls. It's pretty bad, huh? They just like grind. I'm watching them just murder. They get the murder bot in the option. You watch them with the vacuum cleaners, just murder bot in that options chain. Just it's like straight murder. I got trapped in murder bots a few times past week or two, and like fucking knew that I would get trapped. I'm like, here we go, we're gonna get trapped, and sure enough, right, that last part of the day, you get your big downside move, nice bounce, and then boom, murder bot. It's like fuck, get caught in a murder bot. Whenever that happens to me, it pisses me off. I'm not gonna lie here. I'm gonna make a little post here on Gamma. I'm going to post that Gamma chart on FinTwit.
So looking again now to the early market on close imbalance, 562 million to the buy side still.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
So looking again now to the early market on close imbalance, now sitting at 392 million to the buy side.
Hello? Heads up, guys. I got to go outside and talk to a roofer. God damn it! I fucking go outside. I'm like, ooh, is this gonna squeeze up into the bell up here? I'm like, none of that. Missed all that right there. Stock markets is trending on Twitter? Seriously? No shit. Stock markets? Wookin' yeah.
So we're looking at three
look at that
markets on close
tag up
imbalance,
there in the
2
hourly
spots, 6
trigger.
billion to the buy side. So again, markets on close imbalance for the NYSE. 2.6 billion to the buy side.
Woohoo! What was everybody in back here? Were they in 457s? What are they trading right now? Yeah, 15 cents. What a bunch of fucking douchebags. These fucking dealers suck, man. So cruel. Pivot line, next target above. We can squeeze it. I don't think we do, but 457.99. $350, 10 minutes left for the session. Fucking dealers, dude. Brutal. Gangsters. That's why I like futures sometimes. You don't deal with this bullshit. You ain't timing your shit just right. Even when you are right, they're not gonna fucking pay you. Look at that. Damn. Cold. Cold. Cold dealers, dude. Not cool dealers. Thanks, I appreciate it. God damn, his look at this guy's let me show you guys. Oh, you guys want to probably trying to watch this right now. All right, you should see up here. You should see a squeeze. Hopefully, get a squeeze and then a pullback here. Maybe they run this bad boy up last 10 minutes. And I got a call from Joe here. Let me call you guys. Or let me talk to you guys. All right, so hold on a second here. I'm going to turn the stream off at 4 p.m. I'll see you guys tomorrow at 9:30. See you guys soon.
New Zealand 4-month budget deficit is 91 million New Zealand dollars wider than forecast. That's a New Zealand 4-month budget deficit of 3.85 billion New Zealand dollars.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.